Going on, people? Welcome to the meeting here. Welcome, everybody. My name is Rodrigo. Good to see you here. Today, we have a special meeting here today because today we're going to have Matt Maley and Chris Capri, both here, both of our top analysts in options. And we're going to start here at 6 p.m. But very important to know, yes, this is from today. This is from this TLT 500% trade. We sold another batch here at 570. These are trades from today. These are alerts that you would have gotten on your phone. So obviously a great day with Matt. Chris Capri, pretty much he has a 100% winning rate in September and October. I think it's like 67% overall. So there's a lot of things that we're looking at, different trades. Matt Maley is a chief market strategist at Miller Tabak. So he has about 40 years of experience. And before that, he was one of the trading directors at Merrill Lynch. And before that, one of the head traders at Solomon Brothers. So a lot of experience. You probably know him from CNBC or Bloomberg. And Chris Capri is a former hedge fund broker. They're going to introduce themselves and everything once they come. But these are two guys that you want to peel your ears at right now. There's so many things happening in the markets here. We have earnings. I don't know if you guys have seen everything that's going on. The market's been kind of flipped over. We all know that, we've all saw what happened with Microsoft today. That they reported today. Obviously, we know Facebook as well, Meta, Amazon, which is another cloud company as well, reacting on these numbers. Google, of course. And we all saw the jobs number print that we got today with ADP. I think it was estimated to be 113,000, and it came out at like 200 something thousand. And these are payroll reports. These are not the government wishy-washy reports. Those numbers will come on Friday. Okay, so yes. And now, obviously, all these things will impact the market. There's a lot of things happening right now, macro, big picture. And the good thing is that with Matt Maley, we're trading the big picture. So we've traded things, obviously, like the TLT, SQQQ, which we are going to talk about certain trades here. Let me just post them real quick. We're going to talk about simple calls and puts. We're going to talk about spreads, right? Probably some iron condors. We will have Matt Maley, of course, here, and Chris Capri. Some of the stocks we'll be looking at are TLT, SQQQ, SLV. We're also going to look at three other tickers that Chris will send over here in a bit. Actually, I think I already have the tickers. Okay, so Matt's going to talk about TLT, SQQQ, SLV, and other tickers, right? Chris Capri is going to talk about, we have SQ, MU, and there's another pick as well that we're going to talk about. So several of these trades, guys. Bill, is it Bill? I think it's Bill. Let me check. I think it was the SPY bull call spread. Yeah. All right. So it is a SPY bull call spread that Chris did. These are all real-time trades. These are all real trades that you could be getting in your phone any day without doing any work. And there's also this other thing. I mean, there's a lot of things that we're going to talk about. This other one, I'll just let you know, this is not an official trade, but I do have some puts here on SMCI. Some of the news that's been coming out there, their Ernst & Young, their independent auditor, resigned. And they didn't just resign. They sent a letter to the SEC, and they resigned basically for reasons that they said. I mean, you can see it says governance and transparency concerns. And they've been their auditor for about 18 months. And 18 months is a year and a half. And then before SMCI, they had another independent auditor, right, that wasn't able to get it sorted out either. So we have about 2 to 3 years of uh, of accounting practices that are probably not right. So who knows how much they made? There's a lot of things happening with this company. There's an analyst um, that is saying that there's even Mizuho maintains a neutral rating on SMCI and eyes delisting risk. I don't know how far this can go. There's a lot of allegations. Just look into it. But yeah, we're going to be looking at a lot of different things, guys, today. Different stocks, different strategies. We're going to be looking at different types of trades, right? Like for example, like I told you, with Matt, we would be doing simple calls and puts, right? Short-term holding periods of 2 to 4 days. So these are entries and exits, by the way. Everything that you will get, okay, from Chris and Matt, okay, keep in mind, those will be all with entries and exits, right? So you don't have to figure this out per se, right? We pretty much give you everything we need there, right? Well, everything that you need there. So yes, today we are going to have Chris and Matt here. So we're going to go, yes, this TLT trade from Matt, the 570%. This was a trade from today. That is correct. So we're going to get things rolling here, guys. One moment. Just going to give people here a minute to come in and get settled in. So those are the picks. I put some of the stocks that we will be talking about today, right? So Matt is going to talk about some picks. Matt and Chris are going to talk about some picks. So let's get this rolling here, guys. I want to welcome everybody here to this meeting, right? This is a special meeting. Obviously, we have our top two analysts here with Benzinga for options, right? You have Matt Maley, you have Chris Capri, and you're going to learn some pro habits, and you're going to learn from people that are pros at this, right? So just to give you a little bit of a backdrop, Benzinga's been around for about 15 years. 200 employees, a big company, right? Not a one-man shop, right? And as far as the financial news, right? In financial news, as far as the Benzinga inner circles, right? The trading waves and all this stuff, we've had those here since about 2021, right? So we pioneered this whole kind of thing where you would know the gold standard. So if you're new to trading, you might take this for granted, but don't, because 4 or 5 years ago it wasn't this easy. Right now, it's never been easier to make money in the stock market. You have these analysts that are pretty much giving you entries and exits. You don't even have to be there. The education is there. So it really hasn't been easier, right? So if you're looking to make money in the stock markets and learn how you can keep improving, right, those skills, you're definitely in the right place, right? So there's no need to quit your day job. There's no need to have a massive account of these trades. You can do match trades with 5, 10, 15, $20. You can do trades with Chris from 45, $75, and most expensive anywhere, a couple $100, most expensive one. So these trades are geared for the retail trader, right? So if we are all set to go, guys, throw me a one in the chat if everybody's ready. I need to make sure that we're all paying attention and focused before I bring on the analyst. This way, we know we got the whole meeting focused, right? This is the meeting that you want to pay attention. We're in the middle of earnings right now. We have a jobs report coming out. We have a lot of things. Matt's going to analyze the macro. Chris has some interesting insights from options flow and strategies that you really want to pay attention to. So, if you trade options, you need to focus right now, okay? So let's go ahead and bring on the big guns out here. All right, so we got Chris, we got Matt. Let me know, guys, if you guys can hear me.
Good to see you, Rodrigo.
Welcome, Matt Maley. Chris, can you hear me?
Yep, I can hear you. How are we doing?
I'm doing great, doing great. Thanks for being here, Matt Maley, Chris Capri. Um, I'm glad we have this here, right? This is an amazing, amazing strategy session that we're going to have today because of the different strategies, but again, the great performance, right? Again, so Chris Capri is on a hot win streak here, and he's going to talk a little bit about his strategies and his trades with spreads, mostly, also some Maricondors. Matt Maley just got about a 570% winner. We've had other winners with simple calls and puts, and he's going to talk about his strategy. So as an options trader, I'm telling you, you need to be paying attention to this. So before we get this thing rolling, right? Chris, if you want to give us just a little bit of an introduction before we do get started, and then Matt will go with you, and then we'll start with your stuff there, Matt.
Sure. Good to see you, Matt, by the way. And Roderick, are you wearing a Santa Claus outfit? Is that what I see in the background there?
Yeah, it's my Halloween. No, not really. It's not a costume actually. It's a shirt.
Okay, well, I'll talk about that later. I want to see the whole outfit. All right, good to see everybody. Hope you all are doing well. So, welcome to this event here. We got a lot of hot earnings this week. So, my name is Chris Capri. I was a former broker on Wall Street for FXCM between '04 and '06. I traded for a hedge fund from '06 to '07, the JNF hedge fund. And so, I've been doing this, about 24 years. My whole strategy is really centered around I want to look at the most essential variables. And so for me, I'm looking at what is the most proximate driver in the market. The most proximate driver in the market is flow. You could have a reason to buy or sell because of sentiment or earnings or PE ratios or technicals or whatever. But the bottom line is that we all go through the same quarter, and that's order flow. We all become a buy, a sell order, and that collective order flow is what's going to be the most proximate driver of price action. So my job as a trader is to look at kind of look at where the institutions are positioned in the option market, what kind of hedging impacts are going to influence the option flows, how's that going to set up the dynamics for the day, and how can I find key quantitative levels that statistically stand out for me to find these entries and exits. And so that is basically my whole approach. I really kind of saw, especially when I started kind of watching what was going on the dealing desks at FXCM, that how much really flow is really driving it. And the best traders that we had were people that were able to spot the patterns in the flow, see where the market is pushing, and trade with that as much as possible. So that is just my background. I'm the head of the Benzing Option School, head of the Trading Waves, head of the PNP Masterclass, which is a new class that we just came out. And I'm looking forward to showing you some things about how I choose my entries, exits, locations, trade ideas, and how we've been on a win streak since, I think, the beginning of September or end of August. So we haven't had a losing trade since then. And so I'm excited to talk to you about that. And then I'm going to hand it off to Matt here.
Great. Thanks, Chris. Great to see you. Yeah, my background's a little bit different, but quite similar, actually. Again, I've been doing this for 40 years, believe it or not. But I started off on Wall Street, started off as a trader. At two very big firms. Back in the 80s and 90s, for about 15 years, I was Solomon Brothers, which a lot of people may not have heard of if you're younger. But that was the biggest and most important trading desk on Wall Street back in those days. There were bigger firms like Morgan Stanley, Goldman Sachs overall, but in the trading, Goldman was king, and I'm sorry, Solomon was king. They wrote a book about it, Liar's Poker. But anyway, and then I spent then after that, after we got bought up by what's now Citigroup, went on and moved to Merrill Lynch, where I spent 10 years. So a total of 25 years trading, and I was covering the most important trading desks of the institutional side on Wall Street, where I did. Fidelity was the biggest mutual fund, it still is. BlackRock was the biggest hedge fund, although I don't really call it hedge fund anymore, but still obviously a very big company, one of the biggest in the world, biggest banks, insurance companies, etc. And there you learn very quickly that traders don't trade alone. And these people, that's what they do for a living. They're the best traders in the world, and they have in some cases an army of traders in their trading. Nobody trades in an office. They always in their trading rooms so they can talk to each other all the time and tell them what's going on. Hey, did you hear about this downgrade? Hey, did you hear about this news from the Middle East? And so that people are on top of all these things that are happening all the time. Not only that, they have brokers calling them all day long. They don't just have one registered representative that they have all their money with. Everybody calls them because they have accounts with everybody, and they're constantly telling them what's going on. Did you see this flow? Have you seen whatever it might happen to be? And so I learned very, very quickly that those people who try to trade alone are really behind the eight ball. And the thing is now that's been the way the institutions have traded forever. But in the last in the last 10 years or so, we now have the tools where the individual investor can trade the same way. We have options that can trade, not just once every quarter. We used to have quarterly options. Any option you bought expired. They had four expiration dates. That was it all year long. And now a lot of these became more common. In other words, they had monthly and then they had weekly. But in the last 5 or 6 years, they become very, very liquid in those things. And so now the individual investor can trade in those. In the old days, it was just the over-the-counter market. The biggest, if you didn't have, if you did anything less than several $1 million trade, they had no interest in doing it. But now we have ETFs, we have inverse ETFs, we have leveraged ETFs, we have weekly options on all the big stocks, we have daily options on all the big indexes, et cetera, et cetera. And so what Chris and I are trying to do is level the playing field. We have the tools. Okay, that's great. So let's level the playing field in terms of information, whether it be flows or what's going on or historical correlations, things like that, that really help people maximize their returns. I mean, everybody likes to have that big bucket that have their long terms in its 10-year horizon or 20 or 30-year horizon. But those of us who like to trade a little more actively, to have another bucket of money where we can look a few days or let's say a few weeks or even just a few days, and in some cases a few hours. We don't day trade much at all, but there's certainly people in our chat room that do day trade. But anyway, my point is that don't trade alone. This is what we're trying to provide. And again, I also trying to do trades for anybody. If you've got a gazillion-dollar account, that's great. If you have a smaller account, that's fine too. When I come in, I say, hey, I'm going to buy a small position in this or a medium-sized position in that. Because small is very different for one person than it is for another person. I mean, $10,000 might be small for some people, not for most people, but for some people that might be very small. So we get an idea of what we're trying to do and help people not just get some good ideas and manage what they're doing, but also get some good risk management issues. When to get out of a trade, when to sell some of the trade, let the rest of it ride. Piece yourself into a trade. You don't have to necessarily buy it all at once. Those are all the things that we do. So that's kind of my background. But the whole point is that all that stuff you hear in the financial news all the time, that's all great. It's all theoretical. It sounds real good. But the market trades in a very different way. Again, you're thinking about 10 years out, that's one thing. You're looking for active trading, things can trade very, very differently. And these are and so Chris and I are trying to level the playing field so that you have the same advantages that those pro traders have.
That's great. I'm really excited about this meeting. Guys, you should really be, trust me. So let's go ahead and get this rolling, Matt. If you want to share your screen, walk us through these trades. By the way, Matt is also at the end. So it's 30. We're going to do like a 30-minute-ish part with Matt. Then we're going to do a 30-minute part with Chris. After that, we're going to do 30 minutes where we're going to talk about different tickers. Chris is going to talk about Square, Square, SPY, and MU. And Matt's going to talk about Intel, Microsoft, and the Japanese yen later.
Okay. Well, again, we use a lot of different items, and I just want to show you some of the trades we've done recently, just to give you an idea that it's a very consistent. We do these things on a consistent basis. Not always as big as some of the trades I show you, certainly not, but we do some big trades very consistently. This was the TLT. That's the Treasury ETF, and that's another thing to note. We don't just do trades in stocks. We do them in indexes. We do them in commodities sometimes. I mean, we did a big trade in wheat one time. We do it in the bond market. We do it in currencies, etc. Whatever the market's given us, you can't go out and make the market move. You got to take what the market gives you. And this was a trade, this past week. It was one of the great calls I had 6 weeks ago when the Fed came in and did their cut their interest rates, and everybody said, "Oh my God, interest rates are going a lot lower." And I said, "Yeah, that's already priced in. Interest rates have been going down, down, down for months, 6 months." So, I mean, we're going to get one of those situations where we sell the rumor of the rate cut, and we're going to buy the rumor of the rate cut, and the TLT have been going up and up and up, and then and I think we're going to get to sell the news. Okay, that worked out extremely well. However, so now we're 6 weeks later, this week, and we come in and the TLT, now it's sold off in a big way. And I think I thought it was getting ready for a big bounce. And we kept talking back and forth about when are we going to do it? That's one of the great things about the chat room. We are constantly talking about, it's not just me who's giving ideas. People are talking about, hey, Matt, what do you think of this? Or what do you think of that? I'm not the only one coming up with ideas. I mean, there are other people in the chat room talking about these things all the time. So it was really great. We went back and forth on the TLT. Finally, I came in and said, this thing's not only is it getting oversold, but it's really starting to turn around. Really starting to turn around. We could say, well, why didn't we buy it down here? Because I wasn't sure yet. Okay, we'd had another moves where it rallied quite nicely and then rolled back over. But when it started making a little bit higher high than we saw back early in the morning, this was just a bad tick. I saw we made a higher high. We went into it, and sure enough, we actually started selling these in the morning. They were up 200, up about 200% to 300%. We sold the last batch up 574%. So we made a real nice purchase here in the afternoon, but we pieced it out. And again, this is good risk management. Well, if you own something, you only buy one option. Geez, it's up 200%. It's like, oh, sell it. Well, we sold in this case because we bought a bunch of them. We even sold some up 200, and that allowed us to. Then we sold some more up 300%, and now we already had a really nice profit. That allowed us to be a little greedy and let the thing run a little bit further. And we sold. Actually, it wasn't the last part. It was we kept one little runner. It was up 570%, and after it went back down, we actually did sell a little bit more here. But our overall return was over 300%, 4 times your money in a day. Okay, so these are the types of things that we're looking for, because not everybody's thinking, everybody was on one side of the boat in the middle of September saying that interest rates had to go down and bond prices had to go up. And we actually made a bet against the TLT. And then 6 weeks later, the whole thing had flipped. Everybody was negative on the price of TLT, which meant they thought rates would continue to move higher, and we took advantage of the trade. But I also want to give you an idea of what some of the leverage we had, which was late last week. So it's very, very recent. Okay. Here we are at silver. That's the SLV. This is silver ETF. We'll go back on the 18th. I saw that silver, the commodity, was finally trying to break out. It was finally starting to break out above its summer highs, above its July highs. It was lagging way behind gold. So I knew it had to play some nice catch up. So when we came in this was on the 18th, okay, and we bought this was on Friday the 18th, and we bought I just want to make sure I get the right ones because I don't want to give anything back. We bought the silver. I'm sorry, this you can see. We bought the SLV, the silver ETF. We bought the October 25th $31 calls. Okay, and okay, and so between here, the morning of the 18th on Friday till the beginning of the day on Tuesday of the next week, last week on the 22nd. Okay, this is last week. Silver rallied almost 6%. That's a real nice rally. If you own just SLV, you made almost 6%. Nice rally just for a couple of days, right? But we bought the calls. As I said, we bought the the October 25th $31 calls. We made 300%. We bought them at 19 cents here early in the morning on the 18th, and we sold them early in the morning on the 22nd, Tuesday the 22nd at 76 cents. Okay, this is obviously I'm showing you here where the SLV, where the underlying security was trading, but we sold the options, bought them at 19 cents, sold them at 76 cents, and we bought a bunch of them, and so we made 300% on our money. Okay, another trade very similar, SQQQ. This is the ETF, the inverse ETF on the QQQ. Of course, the QQQ is the ETF for the NASDAQ 100, which has all those tech stocks in it. So we at the end of last week, on the 24th, this was Thursday. At the end of the day, I was just like, the SQQQ was going down, it flattened out. So in other words, the QQQ, remember, this is the inverse ETF. So the QQQ was inching up, but then it flattened out in the afternoon. But I really felt, again, I was looking at a couple different indicators that I look at that told me that we were going to see a rally on Friday going into the weekend. And sure enough, the SQQQ fell 4.6%. We sold it almost at the low of the day. Again, I wish we had bought but we came in and bought the puts. The puts. I wish we had bought them here. We bought them here. If you make a lot of money, if you make 500% or 300% like we did on those SLV calls, and you're mad you didn't make 350%, you're going to kill you. You're going to drive yourself nuts. You slap yourself on the back and move on. Again, we bought the SQQQ October 25th $7 puts. We bought right at the end of the day, right here on the 24th, last Thursday. We sold them after about a half an hour on Monday, okay, up 500%. So you see a 4% move in the underlying ETF got us a 500% return on our options. These are the kinds of leverage that options can give you. Now we got added leverage because this is a leveraged ETF. In other words, the QQQs fell about 1.5%. So this fell almost 5%, and we made 500% in just a day. Okay. So these are the types of things we've done just recently. And I'll just tell you some other things we made. GDX calls, you make them in both ways. I mean, this was earlier in the month. I just want to give you this idea. And again, none of them are 500%. Here was the GDX calls. Okay. GDX is the gold ETF. Okay. I'm sorry, the gold miner ETF. I saw gold break out. Whenever you see gold break out, that's one thing. Gold and the gold miners can have some very odd relationships. But whenever gold breaks a key resistance level, the gold miners tend to outperform. So when gold went up about 2 or 3%, we doubled our money in the GDX. Instead of buying GLD calls, we bought GDX, the gold miners. In other words, that's for the mining stocks rather than on the commodity. And we doubled our money in just, in several days. Okay. Another situation here. NVIDIA. Of course, we know what's been going on with NVIDIA. It's been rallying back. People forget that NVIDIA was actually lagging the market, even though it was rising. It sold off in August and it was rallying back in September and October, but it was lagging the rest of the market. Well, we saw a little play, and again, some of my internal tools that we use in the chat room. Got to be in the chat room to get them. We were able to buy on the 16th in the middle of this month. So this is just a couple weeks ago, 2 weeks ago. So I showed you some that we had this week, some from last week, 2 weeks ago. NVIDIA, October 18th, $140 calls. We made 250% money on a return. And this is the situation. Now, again, when we give you these trades, we don't just say, hey, it looks like NVIDIA is going to rally. Good luck. No, we say, NVIDIA, we think NVIDIA is going to rally. We're buying, and we give you the exact trade. November with the exact, obviously, the stock. We tell you the expiration date, the strike price, and then obviously whether it's a put or call. And then when we sell it, we give you the exact thing. We don't sell it and say, hey, let's do the trade and tell everybody after we've already made a profit. No, when we buy the trade, you know it. Well, you know about it immediately. When we sell it, you know about it immediately. We don't sit there and say, oh, we only tell them about the winners, okay? So we do these trades. I'm going to go on and on this because I want to talk a little bit about the macro situation. I'm trying to keep an eye on the clock there because I know. But again, what do we use here? Here's a situation with Occidental Petroleum, okay? This was using technical analysis. See, this is the RSI, the relative strength index. See that green line down there? There's a green line there and a red line up there. Okay, see those two lines that I'm pointing out down at the bottom of the chart? That green line is for a reason. It gets the RSI, the relative strength index, gets below 30, means it's oversold. And it's green because it says buy, go ahead and buy it. When it gets above the red line, okay, that means it's red. Go, stop buying. It's getting overbought. Well, sure enough, it got incredibly oversold here. But I was real nervous about the stock. We didn't buy the options here because it would just been making nothing but lower highs and lower lows. So what I did was I waited. Okay, it came back down, got oversold again, and I waited until it made a higher high. So I used the combination of a technical indicator plus some technical analysis. It's very simple: higher highs and higher lows. And sure enough, 250% on the Occidental October 5th, $54 calls. And of course, we have a little bit more confidence because it's a huge position for Warren Buffett. But again, using that technical analysis, we pull together that you have to pull all these different things. One of the things that Chris focuses on, which is so helpful, it's so important, are flows. What are the buyers doing and where are they doing it? Where are the sellers doing and where are they doing it? Those are so key. And these are the types of things that again, we can read about what Oxy is supposed to do over the next 5 years, but you want to be short-term trading, you got to know technical analysis, flows, sentiment, positioning, all these different things that help us to make these kind of returns. Here was another one with Delta Airlines. Here, one that was overbought. See how it got overbought here, got overbought there. Look how incredibly overbought it got there. You see, it got overbought there. It pulled back for 4 days. Got overbought here, went down for a couple of months. This was really overbought. So I knew we'd get a nice short-term play. So we bought the puts. Sure enough, earlier this month, the October 4th, $50 puts, $400 return. And I'm just trying to say that here's one in UNG. This is the natural gas ETF. Okay. It's like, well, wait a minute. We had a different reading. This is called the MACD cross. Whenever you see the white line, I won't go into what those, we do talk about it in the chat room, but when you see a positive cross, that white line crosses in a positive way. It's the 9-day moving average. That is a sign of a change in trend. You see when it crosses negatively, how it went down. See how it went positively. I was like, well, then why didn't you buy the calls right there? Well, I wasn't sure because it had been beaten up so badly. Again, I waited till we got that higher high, and sure enough, bang, we bought You see 250% has been a common theme lately. Whoops. And I guess on here's some gold where we actually bought some puts. Remember we talked about the GDX calls where we bought them this month? Well, last month we bought the GDX September 27 puts just less than a month ago, 700% in just a day. We've got that's a little that we didn't get the exact, but we actually didn't get the exact top tick. We got very close. I think it was a 702% return. That's the only way I could draw the chart. So again, these are the types of things that we do. There's more treasury ETFs, what we've been doing, and just showing these other trades that we've had. And again, they're not all 500% or 700%. Here it's a double, but that's 100%. We doubled our money. And and I'll do one more here, just one or two more here. Coca-Cola again got really overbought. How many times you can make a lot of money in a Coca-Cola put? I mean, it's just not the sexiest stock in the world, not the most volatile, but every once in a while it gets really overbought or really oversold. See how it got overbought there? Got overbought there. Well, it got really overbought there. So we came in and bought puts, 500% return, 513% back in early September. Okay. And there was another SQQQ trade where we made 300%. Again, I can go on. There was another one, Walmart. Is this the sexiest stock in the world? But no, but look how overbought it got. We came 244% on the September puts. So again, these are things that we've been doing 500% back in August. We like to trade gold because obviously it's been very hot. And then our biggest trade ever, this was a couple of years ago, but we came in and bought the FXI, and we saw an opportunity in China, and we bought the calls on China. This is back in 2022, so I'm not trying to say this happened recently, but you can see China market bounced 27% in just 2 days, and we sold half of our position up almost 3,000%.
Yeah, I remember.
Almost 7,000%. So anyway, that's enough of the trades. But what are you going to do for me lately? What are you going to do going forward? Just check my time there. I'm just going to move over to my Bloomberg. First, my regular Bloomberg, my live Bloomberg, and we'll talk about a couple of things here. Now, what's going on? Yeah, Super Michael. That's a tough one. Okay, what's going on here? A couple of things that I want to point out before we look at some charts is just a couple of things. Number one, very quickly, the Middle East. So it's amazing how everybody on Wall Street has suddenly said, "Okay, this issue's over." Israel has responded to Iran's attack, and so as long as Iran doesn't counterattack again, everything's going to de-escalate. Well, I hope that's right, but I strongly believe that the real goal here is for Israel to take out Iran's nuclear capabilities. This has been escalating all year long. I've been saying it would escalate, it wouldn't slow down. My point is, if you really think that the Middle East issue is going to calm down in a big way, you are assuming that Israel will indeed allow Iran to become a nuclear power. There's no question about that in my mind, and I think in anybody's mind. And there's no question in my mind that they won't let that happen. There are some people who do think it will let it happen. So maybe I'm wrong. But my point is, it's not going to happen until after the election. It may not happen for a month until after the election, or 2 months, or 3 months after the election. I don't know. But this Middle East issue, in my opinion, is not over. That's one of the reasons why I'm still bullish on oil, because whether they hit the energy facilities or not, I don't know. They will, and they can't completely take it out, but they want to set it back like they have in the past. They did it in the 80s. They did it 20 years ago. They've done it several times, and they will do it again, in my opinion, because they have stated many, 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 many times they do not want Israel, that they feel that their existence is threatened if Iran becomes a nuclear power, and Iran is now getting quite close to becoming one. So I think that will. So be careful about that. Keep that in mind in the weeks and months ahead. Again, we're less than a week away from the election, so it could happen sooner rather than later. Again, it may not happen till New Year. I don't know, but I would be shocked if Israel is done. The election. Okay. Now the one thing is that people are saying, and I don't care. I do care about who wins, and I'll vote for one person. But what do you couldn't care less who I'm going to vote for. That doesn't mean anything. What I'm saying, I don't try to tell people who should win. I'm just trying to tell people who I think will win, and what that means for the market. In this case, I was a political science major in my undergraduate work. I mean, I love following politics, and I usually have a strong opinion on who's going to win. And I did say that Trump would win in 2016. Didn't say who should win. I just said I think he will win. This time, I just don't know. But the big threat that we have right now is not what if one person wins and the other one and one person wins and the other one says the election was stolen and doesn't accept the loss. That does that cause problems? I think it's going to cause fewer problems than most people think if that happens. Um, it could, and I suppose it could, inspire riots and stuff. But the other, I think the bigger issue is if we don't know who the winner is, and that happened in 2000, which is 24 years ago. George W. Bush and Al Gore. On election night, the day after that, we didn't know who won. Neither side knew who won. Neither side declared victory. It took 6 weeks to figure out who had won, and finally ended up going to the Supreme Court. Now, some people don't think we'll have to go that far, but if it goes a couple of weeks, that's a big problem for the stock market because we have what's going on in the Middle East, we have what's going on in Ukraine, we have what's going on between China and Taiwan. Did anybody say, hey, America doesn't know what the heck, they don't even know who their next president is. Let's go do what we're going to do. That could happen. Number one. Number two, we have a market that's expensive. Okay, the market's trading at 22 times earnings. People are going to get nervous. Interest rates are moving up. Because one of the things everybody was saying 6 weeks ago is that, we can keep buying. The market's expensive. 22 times earnings, 3 times sales. That doesn't matter because interest rates are really low. Well, they're not so low anymore. First of all, they weren't as low as they were in 2000, anywhere near. But they're not so. So you don't have. It's much harder to justify these higher valuations. So what does the market do if we have uncertainty surrounding the budget, surrounding geopolitical issues, whatever it might be, any kind of policies that may be coming forward? Markets don't like uncertainty, and that will take the uncertainty to a whole new level. So that's what we have to be careful about. Now, the earnings thing, and I tell you, if you're looking to this is the time to do it. We're going to say the markets are going to remain very volatile till the end of the year. I mean, whether it's going to be these earnings that are coming out, we had 2 that came out tonight, 2 big ones. So we had many that came out, but we had both Microsoft and Meta. Everybody was expecting Meta to be much better, and the stock's down. It's not down a lot, about 3%, but it's not small. Microsoft, last I saw, was even down a little bit too. Again, not the end of the world, but we do need to be careful because despite what the financial networks tell you, and despite what the Wall Street Journal tells you, okay, earnings season has not been all that great. Yes, they beat expectations. They do that every single quarter. Every quarter, been doing 40 years, every quarter. Why? Because they lower the expectations enough so that they can be beaten. Every quarter, sometimes the worst, a horrible quarter is when 70% of the companies beat expectations. That's bad. Okay, and below 70, that's horrendous. Okay, but it's always above 50%, beating expectations. Okay, but we need earnings to actually grow, not just beat expectations. We need earnings estimates to go up. They are actually going down since this earnings season began. They've only gone down 1%. And normally I would say, no, that's not a problem. Okay, but that would be if the market was trading at 16 times earnings. It's trading at 22 times earnings. Very few times is it traded. I know there's these people who try to tell you that's really not very expensive. They don't know what they're talking about. Okay, because the more important one is sales. 3 times sales. Only one time right after the pandemic that were more than that. 3 times sales is way more expensive than it was in 2007 or 2000, just before those 2 horrible bear markets. Now, I'm not saying we're going to get a repeat of one of those horrible bear markets where the S&P goes down 50%. What I am saying is that the market is expensive, and don't listen to people who say it's not. Doesn't mean it has to go down immediately. It can stay, it stayed expensive for 2.5 years in the late 1990s. So it could stay expensive for another year. I mean, so I'm not saying that, but I'm not saying it's going to happen immediately, but it could. But my point is the stuff that they keep telling you. I'm telling you right now. I write it down at least a couple times a week. The up-to-date new expectations for 2025. They've gone down a little bit, about 1.5%. Okay, again, that's not a big drop. But we need those. If we want the earnings to 2000 for the market to rally more, we need earnings to be up next year. No, sorry, not take it up. So those 25% estimates, that's looking for a 14% gain in the stock market. I'm sorry. The 2025 estimate will give us about 14% growth next year. And that sounds really good. That would be really good if the market wasn't expensive. Okay, but the market is expensive. Why is it expensive? Because the market went up 25% last year, when earnings growth was zero. Earnings growth was zero, the market up with 25%. This year, earnings are up 11%. Next year, they're supposed to be up 14%. That's 25%. See how they pulled forward each of the next 2 years last year? So they've already done that. So we need better than 14% growth this year. We need like almost 30% growth. We're not going to get that, right? So that's another, so we've got a lot of things that are going to create volatility. And the other thing I say, this is more kind of macro stuff I'm talking about, and I'll wind things up here in the next 5 minutes. But the situation we have to look at too is what has caused this rally this year, and a lot of it has to do with liquidity. I mean, we had liquidity flows, which we can see through the Fed's balance sheet, or actually, and the amount of money at Federal Reserve banks, have stored at Federal Reserve banks, it has been actually been moving up, even though the balance sheet has been moving down. So there's plenty of liquidity in there. The yen, the yen has been very weak. What they call the carry trade, the yen carry trade. You may have heard about that in recent months. That has added liquidity to the system. And then, of course, the fiscal liquidity. Every single, there's a thing called the presidential election cycle, where the economy and the markets tend to do poorly in the first 2 years of a presidency and do quite well in the second 2 years. Well, guess what the market has done? What did the market do in 2023? I'm sorry, 2022? Went down, right? It did went well in 2021. 2022, 2023? In 2024, went right back up. Well, that's the seasonality, sell in May and go away. No, there is a reason for it. It's not just some seasonal coincidence. All right. New person comes in, president, and they have all sorts of momentum. They pass all sorts of stuff, and they say, great, look at all we're going to do for you. But guess what? We're only going to spend a little of it now. We're going to back end load it in the third and fourth year so that I can get reelected. And even if it's a person going for a second term, they back end load it so that their policies can be continued after their presidency. One guy in the last 50 years did not back end load his policies. That was Donald Trump, and he lost his bid for reelection. He wasn't the only one. The first George Bush lost as well. But the point is, and the reason why Trump did it was because most of his stuff, his stimulus was tax cuts, and he did those immediately. But my point is that all this, so no matter who wins this time, that liquidity is going to fade, and they're going to push it out for till 2026 and 2027 and 2028. So that if Harris wins, she'll be up for reelection. If Trump wins, his policies will be continued because Ronald Reagan, who won by a landslide in 1984, he had a recession in 1981. His first year, a recession. He didn't care. And a recession his first year. They don't care about the midterms as much as they say they don't care. All they care about is how the economy is doing 4 years later. And we're not going to have that same kind of liquidity next year. So there's going to be a lot of volatility in the marketplace. So you can't find a better time to be getting involved in this active trading, because the buy and hold strategy, which will work for those real long-term ones, but those stocks that have been going straight up for the last 2 years, especially those mega cap tech names, are going to have a tough time doing it. So I think we're going to have a lot of opportunities. We'll talk about some individual stocks later on. I want to give Chris a chance to talk about what he does, because I'm telling you, this flow stuff is not, it's something that not a lot of people follow, and it is incredibly important. So do pay close attention. He's got some great stuff that he uses.
Absolutely, Matt. Thanks a lot for that insight here. And I'm just going to do a quick recap. Matt Maley's only buying calls and puts, 2 to 3 4-day maybe holding periods, entries and exits, live meeting Tuesdays 11:30 to 1 p.m. But he's available in the chat room Monday to Friday 9 to 5. The package includes Chris and Matt. The link is in the chat. Now we're going to move on here to something a little bit different here. Chris Capri, he focuses on bull call spreads and some iron condors. He's going to talk about his strategy, some trades as well, flow, and a couple of other things. So, Chris, whenever you're ready.
Yep. Thanks to Rodrigo and his Santa Claus outfit. I'm going to keep hammering that. All right, hold on. So let me make sure camera is good. I think you can see me. Just make sure you got it. Yeah. Okay, good. All right, good to see everybody, and thanks for that, Matt. A ton of things that you said that I want to that I agree with, and how I'm approaching it. Some of the risks in the Middle East, the election, end of year rally or end of the year volatility and things like that. So I'm going to be chiming on that as well. Let me go ahead and take over the screen here, and All right. Let me just make sure I got that. Okay. I'll take over this. All right. Y'all should be seeing my screen just fine now, or my screen share is loading. Cool, cool, cool. All right. I'll be getting into this tool in a little bit. This is a new tool that we're launching for the trading waves and the PMP masterclass. That's the price action position masterclass. Before I get into, I want to share a few trades. A couple that I took recently. One that I'm in right now. Why I took it. Kind of kind of pull back the curtain on how I make my trading decisions, so that you can see how I trade and how we're able to find these. Matt had talked about how we're trying to share these tools with you and kind of democratize the market in the sense that tools that used to only be available to institutional traders are now available to retail traders. But you need the skills to understand them, to interpret them, and to be able to leverage them. And that's what we're doing, is to try and break these tools down for you so that you can make money trading as well. All right, so I'm going to go over a trade on gold. I want to look at a micron trade. And then those are two trades I took recently for the Trading Waves members, which is our trading signal service. And then I'm going to get into a C trade that I just took a few days ago that I'm in right now. It's up quite a lot right now, and we're going to keep holding this. Before we begin, though, I'm going to show you our track record for Trading Waves. No hiding anything, all the trades, entries, exits, the whole thing. These are our stats for the year. This is every single trade we've ever taken, every single ticker, every single setup, time we exited, trimmed, all this stuff. The raw numbers are, we have 5 trades open right now. We have 43 wins, 22 losses, which comes out to 66% win ratio. So for every 100 trades we take, on average, we'll win about 66, lose about 33, 34. The average win is about a 50.7% return. Average loss is 61.6. The majority of our trades are kind of broken down here. As you can see, we do a lot of call and put spreads. Call spreads if we're bullish, and put spreads if we're bearish. And these are all the ticker breakdowns. So we're quite diverse across the board. We're on a little bit of a winning streak right now. We haven't had a losing trade since, I think it's like end of August. So we're having a good run right now. I want to go over a few trades, and I'm going to show you the chart and what it looked like when I made the trade. I'm going to explain the basics of my system, and which is called the PFP system, and I'll explain how all that works and how I decide my trades and how you can get access to them. And then I'm going to walk you through the trade, show you when we exit and everything like that. So we're going to go over this gold trade right here. You can see exactly when posted that. So let's see here. By the way, this is the last losing trade we have, which is a QQQ bear put spread. Everything else has just been wins, 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 wins. All right. So gold, we did. There we go. So this is when we took the trade. Shows 9:48 a.m. That's Colorado time. So we bought the gold. Wait, that's the actually. Yeah. Okay. Gold bull cost rate, bought the 242 and sold the 245. For October 18th expiry. So let's go to the actual chart when I bought 9:48 a.m. 10:9. All right. So this is October 9th right here. This is the right edge of the chart. This is not some after the fact thing or something like that. This is what the chart looked like when I was taking the trade. And as you can see, market's been trending down. We had down session, down session, down session, down session, down session, very strong down session, and a little bit of bottom at the end, but the overall price action is leaning bearish. Now, my system is very straightforward. I have 3 decision criteria to make any trade, and these are the only 3 decision criteria I look at. And you can break it down to PFP, which stands for positioning. Where are the institutional players positioned in the market? What's the flow on the day? Are we net long calls? Are we net short calls? Are we net long puts? Are we net short puts? Is options dominating? Is shares dominating? And then the last decision criteria is price action. And price action really just kind of is a way to find patterns in the structures of those order flows and positioning. So going into this, actually, the price action was actually somewhat bearish. There were some transitionary elements right here if you're really good at spotting it. But by and large, the majority of everything that was here leading up to this was bearish. So price action was actually slightly pointing downwards. But with this action here, it was a little bit sideways. Now, I was starting to pick up some internal indications that the flow on the day, we're starting to see on this session here and on the beginning of the session here, that traders are actually buying this. And that could be either they're selling puts to get bullish or they're buying calls. Between the two, I prefer, if I want to take a bullish trade, I prefer if traders are buying calls versus selling puts. There's more strength in buying calls than selling puts. And it's selling puts is a transient strength. Long calls tends to hold strength over time. And it's important you understand the difference. So I'm seeing traders buy calls, buy calls, buy calls. And so I'm seeing the bullish flow come in. So that's now pointing bullish. And then the positioning, that was also the final key element, which is telling me that, hey, this 242 and 240 area is really kind of the max line in the sand for bears. Bears will have bearish views up to a certain point. And this is something you have to understand in terms of positioning. Bulls will have certain bullish views up to a certain point. And we can see, if you learn how to read the institutional positioning, we can see where they're bullish up to. We can see where they're bearish down to. And that kind of tells us where support and resistance is lining up. So I was seeing positioning lining up that 240, 242 is a line in the sand, and that it had room to go up to 245, which it had been a few days before. So I had bullish positioning, bullish flows. Price action is starting to turn around. So again, this is the exact chart that I'm looking at that time. And then here's the line where I took the trade. It goes sideways for a session. And the next day it's already up. And it's up again. We take our first profit. So Matt was talking about managing risk and how he does, if you just do one contract, if you're up a fair amount of profit, you're going to feel the pressure. You're going to feel a lot more pressure to want to take that off the board if you only have one contract. And so we like to trade multiple contracts. And that gives us a chance to take some money off the board, reduce risk, and hold it if it goes for a runner. Remember, we said that position was going to stall right around here, and it did. You can see, boom, it's up. Next day, it's up again. We take some profit. The final trade was closed a few days later. You can see it's sideways, sideways, up again, and we close the final session here. 248. We had bought at 242, 245, and went all the way to 248. We had already made a fair amount of profit on that one. And that one we had banked about the gold trade. Yeah, so the first trade, part of the trade, we banked 57%. The second part of the trade did 126%. Net was 91.5. So that was that gold trade there using our PFP system. Now I'll show you another trade that we did here, which was the Mu trade, Micron. So on the second, we bought the Micron bull call spread with the 105, 110. Bought at 8:40 a.m. Colorado time. This is what the chart looks like at the time that I bought it. Again, what you're seeing is a chart that's going down, 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 even kind of a similar price action structure to what the gold trade was doing. A fair amount of selling towards the end. But we looked at our positioning and we said, hey, we feel like 100 is really the extent of the bearish position. We think this is support. And we bought a 105, 110. So 105 is like way over here. And there's 110. So we are basically anticipating on this day that this thing's going to rally up towards 110. And so what happens at the time we buy it? Here's the vertical line we bought it. Boom. Kind of goes sideways for a second and then up the next day, very much like gold. Up again. A few sessions later, we take some profit, get a really nice big breakout day in this, and close it out at the top of the session here. Remember, we thought it was going to 110, and it went pretty darn close. It ended up touching almost 110 on the day, and then it sold off. So took some profit there, and on that trade, you can see that the MU trade was, where was that? 96%. One trade. Held it for roughly a week. So again, using PFP system, when you learn to read the positioning, you can start to see where these institutional players are parked, and that will communicate a lot of information as to where support and resistance is. Where do the bulls and bears agree? That's a very important point you have to understand quantitatively. So that is what we teach. We actually teach you how to find this institutional positioning in our PMP masterclass, which is called Price Action and Positioning Masterclass. We looked at the flow, learned to read it in real time, and then we can see in the price action the structures were favorable. And again, now here's a trade we just took just the other day. You can see, scrolling down, we just took this on the 28th, 8:07 a.m. So let me show you again the chart at 8:07 a.m. This is where it is right now. So the chart's like right there. This is the chart. This is the right edge of the chart for me. I know I'm looking at this. I'm not cherry picking this after the fact. This is what the chart looked at me. And there's really nothing in here in terms of the chart alone that's going to tell you, hey, this is going to go for some massive runner. But again, by looking at PFP, You can learn to see where the institutions are parked. We saw that 62.5 was a really good location for kind of the bear move to end. And it got briefly past it and it starts to recover in pre-market. And we were like, okay, we like this positionally. Flow, I saw traders buying calls hand over fist on the day. And the price action was kind of communicating to me, hey, we got a nice transition there. So we bought a bull call spread. And as you can see, since we got in the trade, it's gone nothing. I don't know why that's not. There we go. Nothing but up in our favor. This is the next two sessions. Boom, up and up. We bought the 63.65. Here's 63. Here's 65. Hit 65 today. We're going to actually hold this a little bit. We think there's actually more in this. I don't see anything in here that's telling me that this move has run out. We got time for this to, add on some more profits. We could have walked away with about 40, 50% profit in about two sessions, but the flow looks good. The position looks good. The price action looks good. I want to keep holding this. But we're in this right now. So this is just kind of highlighting, how our methodology works. So you can kind of piece together what it is, your decision criteria. Matt was talking about not trading alone. Another important thing that I want to kind of pass on is that everybody has a methodology. Like every successful trader has a methodology and they follow it to the T. Every mixed martial artist is going to have certain things that they're looking for to make their decision on whether to throw a punch or a kick. Tom Brady, when he walked up to the line of scrimmage, he was reading the defenses as he was walking up to see where they're positioned. And then he was using kind of like both his understanding of the player and film, but he was using his pattern recognition skills to determine, hey, even though my play is suggesting I want to go to the tight end, I see that I got a nice open position here on the receiver. And so I want to see if I can exploit that. The point being is that you need to have a very consistent decision criteria for how you make your trading decisions. It can't be, I have a decision criteria that looks like this on one trade, and it's a completely different decision criteria in the next trade. Like, yes, you want your criteria to be able to trade in all different environments. I know Matt can trade in all different environments. He can be bullish one day and then bearish the same day on the same ticker. He can be bullish one day on one ticker and the next day go bearish. Matt can trade bullish, bearish. He can trade trending. He can trade range environments. He can trade volatile and non-volatile environments. He can trade every environment out there. And so, yes, you want to be able to trade as many environments as possible. Just like if you're a quarterback, you want to be able to, read the different defenses and find the holes in each defense so that you can take advantage of it. That's your job as a trader, but you still need a consistent decision criteria. If you are looking at different variables every single time, then there's no way to know, hey, is it this variable that's helping me get winning trades? Or is it this variable that's helping get winning trades? Or is it maybe the two variables here, but not this third variable, which I need to get out? And that's the beauty of the PFP system is that we have the same criteria every single time, which you can learn this method, or you can just follow along with the trade ideas with us. Again, we win 66% of our trades. That's a, if you look at how much we're winning on our winning trades versus how much we're losing on losing trades, that mathematically makes money trading. Like if you're risking a few percent per trade, you'd be up 100% on the year. So it's important to understand that you have very consistent criteria because otherwise you can't isolate what's working for you and what's not. All right. So I've gone over a few trades, kind of explained my system. Matt was talking about a couple things that I kind of want to tie into here. And so I want to talk about, he was talking about kind of election. We have the Middle Eastern conflict. And this is something, again, I'm constantly looking at what's going on in the options market to get a gauge of where the institution's positioning and how are these levers of positioning, of volatility, of hedging impacts from the dealers and market makers, how are these going to lift the market up and down? And so one thing that we've done with our Trading Waves and PMP members and our Binzing Option School members is we've bought a little bit of insurance in case that scenario that Matt talked about where the election's not decided maybe for weeks or months. I agree with Matt 100%. The worst case scenario for the election would be that we don't know who the winner is within a few days. Like it maybe takes weeks or months to know who the actual winner is. Not like one person's claiming they won and they didn't, or one person's claiming that they didn't lose. And, they like, I'm not talking about that. I'm just saying like the election's so close that we actually have to go through a process of weeks, maybe like the 2000 election, to determine who's the actual winner. In that scenario, I think we have a lot of volatility that will enter the markets. And so if you're worried about volatility entering the markets, then I think that one of the best plays you want to have is you want to be long VIX. So being long VIX, VIX is essentially taking the out of the money calls and puts on the SPX and trying to gauge. It's basically taking a form of look at all the out of the money calls and puts within a certain time period, and that will help us gauge how much concern to the right or left tail risk do the markets have. And if there's a lot of traders buying out of the money puts or a lot of traders buying out of the money calls, then that's going to elevate VIX. If they're not worried, they're not going to buy this out of the money protection, then VIX will stay low. And what are you seeing overall is that as we've gotten closer and closer to the election, this was the Japan-ageddon, where Japan lost like 12.5%. Markets calmed down. But what are you seeing? That base after the calm is getting higher and higher. So markets are telling you that, hey, we have a little bit of concerns about some election uncertainty. We got the Middle Eastern conflict. And so VIX is starting to get elevated. And so we bought long VIX calls. You can have a VIX vol call spread is another way to express it. But we bought this through the election as a protection. Instead of buying downside puts, which can be expensive sometimes you can buy really cheap VIX calls. Just as an insurance. The market doesn't even have to go in your direction. As long as the volatility goes up, you can make money. So super, super important. So I think one way to express the same concerns that Matt has, that I also have about a contested election, is that you can buy VIX protection by buying long VIX calls. Have some nice hedging protection for the markets in case you don't want to buy some downside protection equities, buy long volatility. I'm willing to hold this through the election. I think once the election is decided, I'm going to dump this position. So this is a great way to have insurance without actually having to buy it on the underlying itself. So that's a super important thing that Matt was kind of talking about. A couple other things I want to talk about, which is that the good thing about this VIX being elevated now is that if we don't have a contested election, let's say we get a blowout on either side, red or blue blowout or something like that, well, then the concern about this volatility is going to come down. And that volatility coming down acts as a lever to lift the market up. And so you want volatility to come down. If you want a bullish market, the best thing you can do is have implied volatility come down. If it does, the other side of the lever comes up and it lifts equities. It provides a tailwind. And so I think regardless of earnings, let's say earnings remain mixed for the rest of the week. And most of the big earnings are now past us. We still have a couple more. We have Amazon and Apple, which I'm going to talk about in a little bit. But let's say the earnings are mixed or not gangster, but not bad for the rest of the earnings season here. Well, once we get past that election, if we do have that blowout scenario or where there's really no issue about the election, I think once that passes and then the November FOMC passes, I think you're going to see volatility come down and that lever will start to provide a tailwind. As the volatility comes down, the tailwind will provide for equities, will allow it to come up. And I think that could provide the context for an end of year rally, regardless of how earnings, unless earnings are super disastrous, I think that could provide a tailwind for the market to rally the end of the year. So super, super important that you understand that the options market is really just a series of levers. And when you learn how one of them going down, how that influences the market, then that allows you to make trades ahead of time because you start to understand how these things are going to move up or down. Now, I talked about a lot of things there. And as Matt and I look at tickers later on, I'm going to look at Apple and Amazon later, which got earnings tomorrow. We'll talk about that. I want to talk about Tesla. I want to talk about gold, another ticker that Matt talked about that we've been trading the last few months. A couple things I want to talk about really is I want to go through the PFP on these and what my decision criteria is so you can kind of see how I'm doing that. But it's important to understand that trading options is an iterative process. It takes time to learn these skills. And Matt was saying, don't trade alone. I guarantee you when Matt started, in his Wall Street career, he had senior people that he was learning from. He had people that had years of experience from that he was learning from. The same situation was for me. When I started at FXCM and Wall Street on the New York desk, I had two senior people on each side of me that were flanking me, that were explaining to me what was going on, helping me understand that. And that's the kind of a training that you want. If you're going to become a mixed martial arts fighter and you want to join the UFC, you don't go to TikTok or YouTube or Twitter to get your martial arts instruction. You find somebody who's a black belt. You find somebody who's got years of experience, who understands all the ins and outs of that particular martial arts, and you learn from them. And that is, and you're doing it in a gym with other martial artists, right? Like if you're learning Taekwondo, there's going to be like 20, 30 students in your class. If you're learning Jiu-Jitsu, it's the same thing. You're going to be learning from all these different people. That is why you don't want to trade alone. It's the same thing in trading. You want to be with a group of people that have a kind of sensei who's kind of teaching you their skills that you're learning from. They're going to give you feedback, and that you also have people that you can practice with around you and give you trade ideas and give you all kinds of insights. And so that's what we do. So on Trading Waves, I do a live class for my members every single Monday. And I'm basically going over the PFP system on all the tickers that look interesting to me. If we have live trades for that day, I'll make it live in front of anybody. I call it the exact entry, stop loss, take profit, what strikes, what expiry. You get all the details, and I literally do the PFP in front of them. Then the other thing that I really find beneficial is the feedback that my traders get. I have my own trades, but I have students who are trading all kinds of tickers. Matt was saying, hey, other people have trade ideas. It's the same thing in our group. We have tons of students who have their own trade ideas. They're looking at different tickers for whatever reasons. And they'll be like, hey, Chris, like I had this student, Matthew John, today, who was like, hey, Chris, I want to do this trade on SPY. What do you think? And I analyzed the trade live during the class, went through my POP system, and I was like, that's actually a good trade. I'd take it. And that's the benefit of being in a group and not trading alone, is that you have somebody who's kind of guiding it, sharing their experience with you, but then everybody's sharing their trade ideas. So I am there in that live class 15 minutes after the market opens on Mondays, and you can be there live with me. If you can't be there, we record it and you can watch it all later. And if you have some trade ideas and you can't be at the class, no problem. You just post it in the chat room, say, hey, Chris, can you analyze this trade? I can't be there today. No problem. I'll analyze it live, and then you can watch the recording and see my analysis and feedback on that using my PFP system. So that is kind of super important. I can't tell you how much that changes traders' lives. Like for the first 4 years of trading, I was trading by myself, just a normal retail trader. No experienced mentors to get feedback on before I got a job on Wall Street. And I can't tell you how many bad trades I would have avoided if I had a 24-year veteran giving me feedback on my trades, like, hey, I'm looking to take this trade. What do you think? And they analyze it with their system. They're like, oh, yeah, it's a great trade, but maybe adjust your expiry or strike or this and that, or no, this is a bad trade. Don't take it. I would have saved tens of thousands of dollars just from that feedback alone. And just knowing that somebody who's consistently calling out trades, and you see them call out trades time in, day out, make predictions. Oh, this is going to go to 255 on the day. Or, oh, this should sell off and go down another $2 on the day or something like that. When you see somebody analyzing PFP in real time, making call outs, and those predictions happening, that builds confidence. Because you say, hey, what they are seeing, they're able to read what's going to be the outcome in the market, and they consistently hit that. And then when you get feedback from them, and then you see that feedback play out the way they called it, it helps change the way you see the markets. So I can't emphasize that enough, that, you know, learning from Matt, like if I had the chance 24 years ago to learn from Matt, I would have paid thousands of dollars for that, hand over fist, because it would have saved me a ton of money to get his experience. And the same thing 24 years ago, if I could have learned from me today, I would have paid for thousands of dollars for that, because it would have saved me a lot of money. And so I want you to just start to think about what that would be like, you know, to have that kind of feedback, to get access to my option flow report, which is once a week, where I share with you, hey, this is what I see going on for the week ahead, to say, here's the key statistical levels. And also to get access to some of these quantitative levels that I'm sharing with in real time. Like I share a lot of these key levels, and you can see them actually in the dashboard. So this is updated every single day. You can see about 10 minutes after the market opens, we update all our key levels. And this tool right here is going to be made available in the next few days, maybe a week, but it will show you all these key levels of where the institutions are parked, and then how that will help you find key support and resistance levels, find your bullish and bearish targets. When is the market going to turn around? I can't emphasize this enough, how important it is to really understand PFP and how this will help change the way you trade. So I've gone over trading waves. I've gone over some trades. I've gone over some of the things you want to watch out for in the macro event. I think it's time to kind of pass it on to Matt, and he's going to analyze a few tickers. I'm going to analyze a few tickers, and then we'll just kind of do some open Q&A and go from there.
I was talking, but my microphone was muted. Sorry. Okay, let me just pull it up here. Takes me a second here to share.
Yeah, Matt, and also if would be really great to also get your take on SMCI. I know we've been covering that for many months here.
Yeah. Yeah, we should both. I mean, this is SMCI, which is super micro semiconductor or whatever that could. SMCI. Okay. Now, people were asking me earlier in the chat room, were asking me earlier this week and last week. It's like, geez, it looks like it's finally starting to break out, and I was just like, people not. It was one thing that well, I warned because the people who initially warned the street about their situation was the Hindenburg group or fund or whatever it is, a group called Hindenburg, and they've been good. They're not just people who slam companies so they can make money, knock a stock down and cover their short. They do their work, and then shortly after that, of course, the Justice Department or the SEC, I'm not forget which, was going to start doing an investigation. This is way back here. This is when the stock first got hit, then the SEC investigation, and I said, oh boy, I'm not playing in this stock. I thought, oh, maybe if you can break that 50-day moving average, forget about those technicals. Now, see how this, remember we talked about the RSI and how it's getting oversold? Well, it's not as oversold as it was here. It's not as oversold as it was there. But, if they're in trouble, their accounting firm just quit. And they basically said, we can't trust the management team to give us the information. I mean, will this stock bounce at some point? Sure. I mean, you can get a day or two here, but boy, do not buy the stock, right? You want to buy the calls because the call, but because you can spend a lot less money and get a lot of leverage, but any money you put into it, assume you lose all of it. And if you're okay with that, you could make 2,000% on a Sunday. Who knows? But it's just would be a complete lottery ticket because again, I don't know anything about how true these allegations are. All I know is that when Ernst & Young, place like Ernst & Young says we quit, that's just not a good situation. I would stay away from it. If you want to go ahead and buy a lottery ticket and you see the options as they went out today, let's say, oh my God, this stock could jump 10% in one day, sure. And you want to come in and you want to spend, geez, I've got $200. I really don't care if I lose it all. And I think it's going to jump to 40. Well, I might buy for 55 cents. Look at the wide spread. I mean, 50, it's whatever, 25 spread between the bid and ask. You want to use a limit order. If you can get them at a decent price, you might get lucky, but assume you'll lose it all. And buying puts, the puts are very expensive now, so be careful about that. But if things calm down, you can see what happened is that this will come in spurts. In looking at the chart, and see how it SMCI, and you see how this thing just came in spurts. It didn't happen. This, of course, is straight down, but this sell-off when Hindenburg came out. This sell-off when the SEC said they're going to investigate it. This sell-off is when this could dance around for a while, and then we'll see another big decline. I can't tell you the timing of it. I'm not saying they're going out of business. That these people, anybody's going to jail, anything. I'm just saying there's just too many other opportunities in the marketplace right now to make money, to play around in something where there's questions about legality. I'll just leave it at that. The stocks that I'm going to talk about. Well, first I'm going to talk about actually the one I'm going to talk about first. This one I have came from a chart that I did this morning in my morning comment, and this is Microsoft. Now this chart is from this morning, but it closed just slightly. I think it was within a penny or two of this anyway. So it really is still a good chart. Now the stock is trading down about 3% last I saw. Initially it traded up about 2%, then it was unchanged. But their revenue guidance, I just wrote down when Chris was chatting there. I was just talking about some of their revenue guidance, their cloud revenue. I'm sorry, said their cloud revenue growth was slow, and they talked about how the commercial cloud margins will shrink as well. These are not good. This is a company that spends $10 billion a month on AI, and they're not getting the return on that as quickly as people would thought. This company is a great company. I'm not trying to, talk about it. But I don't want to try to say, oh my God, this is the same as super micro. What I'm saying is that we have a couple of negative things going on here. First of all, see that yellow line? That's the 50-day moving average. The purple line is the 200-day moving average. It's very close to a death cross. The death cross is when the 50-day drops below the 200-day. A golden cross is when the 50-day crosses above. So it's very close to a death cross. Now, both lines usually tend to be having to fall to make it, but either way, it just shows it's a change in trend. Okay, but more importantly, it's a head and shoulders pattern. The neckline of head and shoulders patterns are rarely flat. They're usually tilted one way or the other. And this one is with this sell-off. Looks like it's going to happen tomorrow, unless we hear something overnight to change that. If it breaks below that neckline, that's going to be a problem, because you can see the stock has already underperformed. We got the S&P, the Nasdaq composites making a new all-time high. The S&P's already made a new all-time high. The Nasdaq 100 is very close. It's 0.5% of making a new all-time high, and this is still less than half. It's recovered less than half of that sell-off that we saw this summer. The stock's already been lagging. It's a great company. If you hold it, nothing wrong with holding on for 10 years, 20 years, that's great. But near term, it breaks that neckline and sees a death cross. That's going to be a big problem. It's going to go to 400 quickly and could even be lower. I'm certainly not saying that's happened this week or tomorrow, certainly not tomorrow, but this is something we're going to be keeping a close eye on. And again, this is so important. One of the most important things for the marketplace right now is that the AI earnings have to broaden out. It can't just be a few companies, obviously just the chip companies. We saw what happened with Advanced Micro Devices. This stock got down last I saw it was down about 9% today. I don't know where it closed, but that was a little bit different because it didn't have to do with problems with their AI chips. Their AI chips are doing great, but again, Google reported some good numbers and showed that some of their AI stuff is working. That's great, but we need that we are paying for much better returns. A much better return on investment on this AI phenomenon, and it hasn't happened. That's why we saw a 12%, 13% correction in the Nasdaq this past summer, because as we went through earnings season, especially this part of the earnings season, everything started heading south, because we realized, oh my gosh, everybody been talking for a year how great the AI earnings were going to broaden out, going to change the world for everybody. It is going to change the world. Right now, we're pricing it in that it's going to change it overnight, and we're starting to learn that it's going to take longer than that. So we need to be careful. So keep an eye on that. Right now, that trend line, that neckline, the neckline for the head and shoulders pattern is down about $418. We break below that, we got some problems. So keep a close eye on it, because again, it's an end user. It's not an end user of AI, and they've been touting it in a big way. Whoops. Okay, now I want to go back to the two other stocks, and this is going to be an interesting one. Now, Intel. Oops, let's go back to Intel. And you say, oh my gosh, why do I care about Intel? Well, there's so many other stocks. Well, there are a lot of other stocks, but on long-term play, think about this. Okay, they are too important to fail. There's some people that say too big to fail. They're too important to fail. But at the same time, it may take them a long time to succeed. Of course, we're learning that. But nobody else in this country makes chips, and nobody else can make chips. Now, Taiwan Semiconductor is building foundries here in the U.S., but those are going to take a while to come online. And if a war happens or China attacks Taiwan, 25 to 30% of our chips gone. The supply gone. Okay, the U.S. for national security reasons, for our defense sector, for all sorts of different issues, we need a semiconductor company to make our chips for us, and Intel's the only one big enough to do that. However, it's taking them really long time to turn things around. I think they will, because the government's going to give them enough contracts to make sure that they do. But they've had a brain drain. They've had these issues. But what about on a short-term basis? What should we do? Well, this is what I'm doing. Okay, you see this 50-day moving average, that yellow line. You got all sorts of hearts going through it, but that's okay. That yellow line there, see right there. See how that's been real? That's the 50-day moving average. That's been great support. Okay, for just for about a month. See this rally here? You say, well, geez, that's a nice little rally, right? Well, actually, that rally. So I'm talking about the stock, not options. Okay, 33% rally right there in just a couple of weeks. If this thing breaks out, you're going to get another 33% rally. You want to make a 33% in a month in a stock? That can happen in this rally. And the good thing is that if it breaks below the 50-day moving average, Okay, that 50-day moving average is 2169. I'm gonna put my stop out level at 2150. Okay, because whenever it can break slightly below that line, like it did here, right here, it broke just slightly below the line and bounce back. So we don't want to get a head fake and get into that break, at 2160, and then we bail out of it just before it snaps back. But that's your stop out level. So you're risking 3.5%, 4% to make 30%. I like those odds. Now, so think about this. This is, again, for me, it's a stock trade. If it really starts to move and we see some good reasons, and certainly MACD charts and certain things that we look at that could take us, hey, we're not only we're gonna add to our stock trade, but we're gonna buy some calls as well. We could do that. But this is the trade I like right here. Buying the stock, using that that 2150 level as your stop out, and you get out of the stock, you lose 4, I think it's 3.5%, 4%. Okay, and we all have stocks that lose. Never lose more than 10% in a stock trade. Okay, ever. Get down 10%, get out. Okay, doesn't mean you're wrong. You may get back into it a month later, make it back to it 3 days later. I'm talking about a trade that's going to last for a couple of months, and of course even for a couple of years. It goes down. Do not keep buying. It's one thing to buy something at $22.30 and then buy a little bit more at $22.20. That's fine. But buying stock at 22 and then at 20 and then at 15 and then at 10, that's just a losing trade. Do not add to losers like that. Nothing wrong with adding to gainers. Okay, you like to do that because all it does, you're adding to a winning price and you can just raise your stop level. But the point is right here on Intel, I like this trade. Use that 2150 level as your stop out level. Okay. Now, in the last one, the yen. Okay, now this is, I'll be real quick here. Sorry, I don't want to take up too much time. But the Japanese yen, oops. This is the way we usually look at it. And we could also look at it at the currency pair. And I could look at it the other way, which would be the yen dollar cross instead of the dollar yen cross. But what we have here is, see this right here? This is a big rally in the dollar versus the yen. We don't even need, well, I'll get that purple line. I'll leave the 200-day moving average there. That doesn't matter. But sometimes you get too many lines in there and it makes, So what happened here? Okay, cool. What happened? Well, the yen was getting, so since this is going up, that means the dollar is getting, I'm going to do it the other way. I'm going to do it JPY USD. So this would be the currency on, this would be the dollar. We always hear about how the yen is getting weaker. Well, it is. So this would be a better way to look at it. Okay, boom. So you can see how it's getting weaker. It's below its 200-day moving average. And the problem is we had earlier this year is that the Bank of Japan, whoops, got rid of the wrong one. The Bank of Japan came in, it was getting weak, and they finally came in and defended their currency. And the yen just rallied a big way. The problem is that we have this, I'm sure you heard about this in early August, because we had a kind of a mini meltdown at the beginning of August, when the yen just got stronger and stronger and stronger, and all these people had to unwind what's called the carry trade, the yen carry trade. And it's a way where you borrow in a low yielding currency and pay out and get paid in the higher yielding currency. So these people, and they leverage it up in a big way. And when they leverage it up, it pushes all sorts of liquidity into the system, and that allows the market to rally hard. I'm telling you right now, the real reason why the excess liquidity in the system is a big important factor in the markets and the trades. Okay, we all know what happened during the right after the financial crisis. They flooded the system with liquidity through QE programs. All right, and then and then they did the same thing, so that helped the market rally. Okay, even though the fundamentals weren't there to really justify it. Okay, the same thing happened during the pandemic. The Fed had to do that. The economy was basically stopped. I mean, the global economy almost came to a halt. So they put a huge QE program, much bigger than right after the financial crisis. Other central banks did the same thing, flooded the system with liquidity that pushed asset prices up well above what they were justified. But that was okay because we knew that was a temporary thing and the economy would come back. But the problem is they left the liquidity flowing too long. But guess what? When they pulled that liquidity out, the market got hit. I mean, 2022, bear market, right? Because QE ended and QT stopped. So QT started. They started draining liquidity out of the system. the carry trade is another way they add and take out, or nobody takes it out. It happens in the marketplace. It's not the Fed doing it. It's just the marketplace doing it. And there's a reason why this move up in this rally in the dollar knocked the market down. And then it knocked the market down again going into early September. And then, of course, the yen started getting weak again, and that's helped the market rally. Well, what's going to happen now, especially after the election, after the U.S. election? I mean, the Bank of Japan still has to defend its currency. And if they do anything to do that, okay, and this shoots up, we're going to see another pullback in the stock market. So that's why I'm watching the USD. This is why I'm watching the dollar. I'm sorry, this is why I'm watching the yen, again, oversold. And I'm going to go back to this one more time. I'm sorry, because it's a little bit wonky, but it is important. So that's why I wanted to talk about it. But just remember, keep an eye on, because when you hear about it in the financial press, whether it be in the Wall Street Journal or CNBC or Bloomberg TV, they always mention it in the dollar versus the yen. So in other words, this going up, everybody's got a 155 as a key level. So even though it's rising, that means that the yen is weakening. So just remember that. So the higher the dollar yen goes, the weaker, the dollar yen cross. So when you hear about that 150 level, if you see this thing drop below 150, 150, okay, watch it every day. Keep an eye on it. If you're trading, watch this every day. That's the 200-day moving average. That's going to be a problem. Okay, that's going to mean that they're going to start unwinding the carry trade just a little bit. Not a big deal. I don't want to scare people. Oh my God, it gets to 150, 140. I'm going to sell everything now. But below 150, that's going to scare some people. And again, it's overbought. So you got overbought there, straight down. It got way overbought there, straight down. Okay, each one of these, we had a little pullback in the stock market there too. But because liquidity has become even more important, be very careful. Keep a close eye on the US dollar, okay? And also keep a close eye on Bitcoin. Bitcoin is a liquidity, it's not totally driven by liquidity, but it is driven a lot in a big way by liquidity. You hear Bitcoin's down a lot. Look at this. The Bitcoin is down $3,000 or $4,000 one day. Look at the USD JPY. Look at the dollar yen. You can look it up right on CNBC.com. Go to, you can look it right up. It's very easy to look up and see where it's trading. Remember those levels, 150, 150, and 150. One break below those levels, that's going to signal that there's less liquidity in the system, and you want to be, and the VIX is going to be shooting up, and you want to be doing what Chris has said, buying VIX calls, or you should already have some VIX calls, and then let them run. Let them run if you see this thing break down, because it's going to tell you, especially if it's breaking down with the Bitcoin falling, it's going to tell you there's less liquidity in the system, and therefore the market's going to need to see a deeper correction than we've seen probably at all this year. We could see as much as 10%. Not really looking for that. Not say it's going to be that deep yet, but we could see that next year. So keep that in the back of your mind and keep it in.
All right, great stuff there for the analysis there, Matt. And I know that you have some, well, in the chat room, this or next week, I know you have some picks that you'll be putting up there.
Oh, absolutely. I mean, United Airlines right now, incredibly overbought. We own some puts in that one. We may be adding to that. It may not fall till next week, but
right,
totally technical. But we got lots of good plays out there right now, and some ones in natural gas, et cetera. We got a lot of plays.
Great stuff there. So I know that Chris, I know you have some stocks as well that you have there in your docket. If you want to go ahead and just take over the screen there.
Yep. Okay, let me just all right. Screen's loading. Should be seeing the second here. And before I kind of share what I'm looking at, I want to talk about one of the things that Matt was mentioning. You know, he was talking about with the technical potential breakdown in Microsoft. And I just want to show you something quantitatively, what we're seeing in the options positioning in the market. So this is something that's available every single day. We update this every single day. And it really kind of helps us highlight key positional levels. Remember, I talked about my system is PFP, positioning, flows, and price section. I want to know where the institutions are parked. And I want you to look at Microsoft. Remember how he was saying that, hey, I think this can go into 400? Well, our top concentration of puts is at 400. That's where we see in terms of Microsoft there. And so Matt was seeing something technically and kind of making an estimate of that. And I'm saying, hey, this is one of those situations where the technicals line up with the option positioning really, really well. If it starts to unwind, we could see it unwinding down. If it loses 420, in our opinion, then we could see it unwinding down all the way down to 400. At that point, I think it would probably stop because I don't see really any liquidity or fuel for it to go below that. But if it does start to unwind pretty heavily from that sell-off, just want to let you know, kind of like, hey, I'm seeing the same thing on the options positioning. Again, look, PFP positioning, flow and price section. So, all right, moving on. We got a couple earnings coming up. So we have Apple, we have Amazon. So I want to talk about Apple and Amazon that are tomorrow after market. And then I want to talk about with Tesla. So what's going on with that? So Apple has, and I kind of want to go back to this thing real quick. And so, and we'll come back to this in a second here. So looking at Apple, you can see there's been a lot of heading into the earnings. Nobody's really laying their foot on the gas either way, right? We're not seeing the bulls really get too far above. We're not seeing the bears get too far below. And I want you to kind of pay attention to this line right here and just see how, as we gyrate away from it, the market wants to find its way back to it. There's a reason for that. So we have this level statistically that's called the TGS top gamma strike. And you can see for Apple, where is that? 230. What this is basically saying is 230 is the level where the calls and puts have the highest amount of agreement. And where both the bulls and bears have the highest amount of agreement, that level often becomes very sticky, and you often see price gyrate around that until we have some sort of catalyst or heavy flow imbalance to push away from that. So I'm not surprised that Apple has been gyrating around this 230 level for now, what is that, 10, 15 sessions? So just so that you can kind of see how important it is to understand position, because if you understand where these key levels are, then you won't be surprised if it just goes ranging for several sessions or 2 weeks, because that is how the positioning is dominating there. All right, with that being said, I want to take a look at where do I think, if we have a really strong Apple earnings, where I think it can go to, and where do we think it can go to the downside if the Apple earnings don't dress to impress. So going back to this thing again, I want to point out 2 levels for Apple. Our top call strike is 250. That's where our kind of like highest notional gamma position is for calls. And then our top hook strike is 220. That's kind of like the highest notional gamma position for puts. And so what that's really telling us right now is saying basically, hey, if Apple really disappoints, we could see it going all the way down to 220 in terms of positioning. And if it has a gangster earnings, and I mean, it's going to have to be pretty gangster earnings, that we could see it potentially making its way up to 250, maybe by November OPEX or something like that. But it's going to have to really do that. Now, looking at if the earnings were happening right now, we can see that the implied move is basically saying about $9 up or $9 down. So if the earnings were happening today, like in the next 5 minutes, the options market is basically saying statistically about 66% of the time, we would anticipate a movement of about $9 down or $9 up. That puts us right around 240 to the upside or about 220 to the downside, near that TPS level. If, however, the earnings come out above expectations or below expectations, then it might have enough fuel to get beyond that. But that's kind of what we're predicting ahead of time, is this kind of scope for a move about $9 up or $9 down. So just so that you're kind of aware of what we're thinking. If it has a very inline earnings, they're kind of meh, and it's not like gangster and it's not bad. If it loses positionally for us, where we feel like it's going to start to weaken. Yeah, below 230, then you have 225 and 220, and they have almost the same amount of notional gamma and positioning. So if it starts to lose it, I think it can go to 225. If it loses 225, there's enough liquidity to pull it down to 220, and then we think it would probably stall. It'd have to be a really bad earnings for it to lose 220 going into earnings tomorrow. Amazon, analyzing the option positioning. So you should be able to spot kind of something similar. There's a lot of gyration. Like we get far away from 190, boom, comes back. Get far away from it, come back. Sells off aggressively, just finds its way back to 190. That is not a coincidence. Where is that? What is 190 to us in terms of Amazon? It is our top gamma strike. Highest notional gamma of all strikes, all expiries, 190. That means that the calls and puts both see this as a very, very strong level. So it tends to pull it. If you get too far below it, the market tends to pull it into it. If you get too far above it, the market tends to bring it back. Only until you have a catalyst or a heavy flow imbalance will the market separate from that TGS. So to us, it is no surprise going into earnings that Amazon has spent a lot of time around this 190 level. Now, in terms of this, positionally for us, I mean, it's pretty easy. $10 up. It's almost the same thing. $10 up, $10 down. If Amazon really dresses to impress its earnings, we can see it getting up to 200. Is there fuel for it to get beyond 200? Yes, but the flow drops substantially. Above 200, you're talking about 30, 35% of the bullish flow that is at 200. So if it's going to try and push back 200, it's going to have to work really hard to really engage that flow to kind of pull it into that. But I would estimate that it probably stall around 200 unless it's like some absolute gangster earnings. If, on the other hand, the earnings come out not impressive, 180. Below 180, 175 is kind of weak. I think if it loses 180, I actually think it skips past 175 and goes all the way down to 170. I don't think there's enough positioning and liquidity at 175 to hold it. That kind of creates a little vacuum. And so the 170 strike will start to then pull in. Kind of like gravity, the closer you get to it, it'll be like, hey, I have the bigger center of gravity. I'm going to pull you in. And so that's what's going to happen here. So I'm kind of predicting something similar, $10 up, $10 down. In terms of positioning where I'm sitting there right now, but I'm not surprised to see it gyrate, and it'll probably gyrate around 190 unless somebody gets some inside information, starts to make bets ahead of time. It'll probably stay around 190 until the earnings prints happen. So that's kind of the same position on that. All right, one more I want to talk about is Tesla. So Tesla had a very strong earnings. They missed on, I think it was sales, but they beat on EPS, so margins were pretty solid. Had a very, very good reaction. Part of the reason why Tesla had such a strong reaction, and we told our members ahead of this, was call skew is not that bid up. So think about it like this, think about call skew being bid up very much like the housing market. If everybody thinks houses are going to go up, they're going to buy a bunch of houses in anticipation of the prices going up and then them being able to sell later on for a lot more money. But if nobody is thinking the housing market's going to go up, then most people are not going to be buying those houses. It's not going to inflate the values. And so you're not going to see that kind of forward skew for houses going up. With Tesla, yes, it definitely did great on EPS, but the calls were not heavily bid up. They were actually quite underpriced. And there were enough people who had long calls, they just weren't priced. And then what happens is the earnings come out, and now all of a sudden these call values are gaining a ton of money, and the dealers are caught off sides. The option dealers and market makers are caught off sides, and now they have to aggressively buy to hedge for the fact that these calls have now gained massively in value. So we kind of had a short-term gamma squeeze there to where the dealers really had to buy to hedge their positions. And that's what allowed Tesla to have a 25% gain on that. It's cooled off for the last few sessions, but we haven't seen aggressive selling. It's mostly traders selling calls. So I anticipate that Tesla will probably, let's take a look at our dashboard, probably gravitate towards 250 maybe. Yeah. Top gamma strike 250. I think if it continues to weaken, if the next two earnings that come out tomorrow aren't that great, I can see Tesla weakening to 250, but then I see it stalling around there, and I see traders, technical traders and option traders wanting to come in and buy at 250 and see if they can get a nice push after the election. So that's kind of what I'm seeing positionally in terms of the upcoming earnings. I think that's pretty much it. Do we want to, Rodrigo, maybe take one or two tickers in the chat, analyze them in real time, and then get some feedback? Kind of Matt and I go back and forth for a couple tickers.
How are we doing with time there, Matt?
Matt, can you do a couple tickers from the chat?
You hear me?
Okay.
Yes, good.
So Matt, why don't you go ahead and take the first one with NVIDIA there? Oh, Matt's thing's froze. I was like, wow, he's holding that poster. I'm like, there he is. He's back.
Okay, what
Yeah, so go ahead and look at NVIDIA there. Take over the screen there when you get a moment.
NVIDIA, what's the symbol on that one? Just joking. I used to have, say it's like I know every single symbol, between my brother and I, we know every single symbol of every single stock in the United States. And they say, oh, you're kidding. And then you say, ask me any of them. And then as soon as they get the one you don't know, you say, oh, my brother knows that one. Boom, boom. Anyway, NVIDIA. I just had to say something while I waited until I pulled up a chart. Okay. Here we go. Okay. Now, we see the the potential, see, it's getting overbought. Okay, we look at that. RSI is not the be all and end all, but we look at the weekly chart. But my real point is, see, it's getting overbought on its weekly chart, but nowhere near as overbought as it was here or here. But it's just as overbought as it was here, and it did cause a bit of a pullback. And of course, it got much more overbought there. Again, but my concern is that we are looking at a double top, possible. See, I care about there. We've gotten a little bit above it, but not enough to get really excited. This is the weekly chart, remember. And so if this thing rolls back down, which is a big if, you get a double top. I said earlier, one of the worst things there is a head and shoulders pattern. But right there close to it is a double top. Double tops are just really, it just means that all of the buyers took it up one more time and ran out of gas, and then they're just done and the thing falls down. Again, one thing about technical analysis too is, remember, it's not just a bunch of lines drawn on a chart. It tells you where the buyers and sellers are. Okay, in this situation, on the negative side, it could be a potential double top. On the positive side, though, we are forming an ascending triangle pattern. Now, it has the word ascending in it. Doesn't mean it always breaks to the upside, and doesn't mean it does it the vast majority of the time, but it does do it the majority of the time. In other words, 60% of the time, it does tend to break to the upside. But there are other things, like, for instance, when you break a neckline and a head and shoulders pattern in a meaningful way, again, like you break any line, it has to be done in a meaningful way for it to be compelling. But boom, so you can see that there. That's the ascending triangle pattern. And what this tells us is the sellers keep coming in here at the 140 level. Okay, this came in here. Now this is the second time, the third week in a row, they've been coming in at that 140 level, but the buyers are coming in at a higher price. Okay, so that's really helpful. The other thing to know about technical analysis is that it tells us things in advance. All these big institutional managers, they have analysts that tell them everything that's going on, and they're telling them, hey, such and such a company, they're picking up all sorts of orders and they're going to break out. Well, that's great. But sometimes they say, well, but they're not going to be able to do that unless they add some more people or open a new factory. Well, it's going to take time to hire those people. It's going to take time to build a new factory. Well, the institutional player is not going to wait for that, for those things to be built. They're not going to wait 6, 8, 9, 10 months. They're going to go ahead and buy the stock. And that's why those stocks move 6 months in advance of their fundamentals. The thing is, the institutional guys know about that. The individual investors don't know about that. And so they look at charts to tell them, hey, somebody's buying. They must know something. Let's go ahead and buy it. Now, going back to NVIDIA, here we are, ascending triangle pattern. If this thing, so if it breaks down, ends up being a double top, breaks below the bottom end of that pattern, that's not good. Going to be a big problem for the stock. If it breaks out, though, to the upside, boy, that's going to be bullish. And you're hearing more and more people talk about, if we get the year-end rally that Chris was talking about earlier, I think it'll be very likely, even though we're talking about, this market has to broaden out and the small cap stocks are going to catch up and all that. The S&P 500 equal weight index that nobody's talking about anymore. Why? Because it has actually underperformed since the August lows. It was finally outperforming for a while, but it's not by a lot, but it's underperforming. If this thing goes and the market goes in it, they're going to go all those big institutions are going to go piling back into these big cap tech names. So we're at a key technical level right now. One thing or another is going to happen here. It's going to break out to the upside or it's going to break down. And I think that we usually almost always see year-end rallies in election years. Almost always. Sometimes we see a big dip in early November and then it comes. But we did see one where it did in 2000. It did sell off hard. That's not out of the question yet. So key technical level, I'm going to let the stock tell me which way it's going to go. Then I'm going to pounce. As I showed you earlier, we have already made some nice returns on the NVIDIA calls. We may be doing that again before the year is over.
That's some great insight there. So Chris, if you want to take one ticker, then we'll get closing remarks, and then I'll do a walkthrough of the programs here from Matt and from Chris to show you everything, the ins, the outs, explain the details. Okay, Chris, you ready?
Okay. Yep. Taking over. All right. Should be loading up here in a second. There we go. Okay. So first, let's talk about Meta. So somebody had the question, hey, why did Meta sell off in the after hours? Any insights into that? The bottom line is there's never ever one why, because there's never ever one person who is the only person driving the market. You got to look at the market as a collection of players, and it is that collective imbalance to the buyer sell side that's going to drive it up or down, and that's both in shares and in options. Now, in aftermarket, you don't have to worry about options; it's shares that's driving it in this case. And so, obviously, the fact that it's down 3.75% means that traders weren't totally impressed enough to feel like, hey, this is going to go higher. Now, my job, again, is to look at the PFP and what's going on there. First off, the implied move, the options market had a fair amount of volatility. They were actually anticipating about a 10% move up or down. So the fact that this is only 3.75%, that's definitely, to me saying, hey, we had an underreaction in terms of how far the options market had predicted it could go up or down. I mean, it was basically expecting almost $50 up or $50 down. Do I think this has more losses in store? Probably. When I look at the positioning on Meta, so where are we at? 573.85. I don't like the technical structure. Like when I see technical structures like this, I usually lean towards it selling down even further. Okay, for me, positionally, if Meta loses 570, then I think you're going to start to see broader losses going on. Why? Because below 570, if I was to draw the positioning, this is kind of how I draw it. This is on the strength here. Below 570, it gets a lot smaller. And then I only see a pickup back at like 550, which is not far from the spike lows here. So I think if Meta starts to unwind and loses 570, then I think there's not enough positioning wise here right now as of the close in the options market to really buffer it in this 560 area. So I could see it weakening down to possibly down to 550. At that point, I think technical buyers come in, start to buy it, and scoop it back up. But right now, short term looks vulnerable. Never think about it as, hey, there's one overarching why everybody bought and sold. There's multiple whys. Doesn't really matter. The key is to understand, hey, what is the flow pointing to right now? As Matt was saying, let the stock tell you what it's going to do. Watch the price section, watch the flow, and you will have the stock tell you what it's going to do. So that's kind of what we're leaning at on Meta right now. Closing remarks, Rodrigo?
All right, so let's get some closing remarks here, Chris, on your end. Then we'll get some closing remarks from Matt, and then I'll do the walkthrough here for the people that are here with us in the meeting.
Yeah, so you probably heard Matt and I say a lot of the same things just from different angles. Like he's coming from one vector and I'm coming from another vector, but we end up landing at a very similar place because we both have kind of tuned into what institutional players are doing and we found methodologies that work for us. And our job is to take those methodologies and translate them for you. So I'm sure Matt's going to probably say something about don't trade alone. I can't recommend it enough. You are not, if you want to become some gangster martial artist, you're not going to walk into an empty martial arts studio and learn by watching yourself in the mirror. That's not how you're going to become it. You're going to get feedback from somebody who's an expert on how to throw those kicks, the punches, the forms, and all that stuff. That's your job as a trader, is to learn from somebody who's mastered those kicks and punches and can show you how to throw them yourself. So that's what you're doing in trading. That's what you're doing in Matt's room. And he's kind of sharing with you his 40 years of experience. Like that is an immense amount of experience. And, even when I listen to him, I've been doing this for 24 years and I was on the institutional side like he did. I still learn a ton of things from Matt. And at the same time, my flow-based approach is something different, but we end up kind of coming to the same place. Let the stock tell us what it's going to do, and then we can make our decision and get aggressive there. So you're going to find that a lot of things we're going to say are going to kind of line up with each other, and that's because they work. And there's a reason for that. When you start to get a lot of people out there who are doing very successful things, you'll see a lot of things just line up because they work. And so don't trade alone. Really take the time to kind of learn the different methods. Matt has got a ton of unique skills he's going to teach you, and just wisdom and insight into the markets. Learn from that, study it. And if you want to learn the PFP system, then I can break it down for you every single day with our live trades, tell you what I'm seeing so that you can see yourself and you'll start to find these traders yourself. Our job is to take what we learn in the institutional markets and make it easy for you to understand so that you can make money in the markets. That's what we do in our rooms. That's what we do our live trades. And that's what we do. We analyze and give you that feedback. We are telling you, hey, here's how you throw the kick and the punch so that you can kind of do this successfully. That's our job.
Thank you,
Yeah,
Chris.
I'll just add, what to what Chris was saying is that this whole thing is, we haven't used the word, but I think we've been talking about it, is education, teaching you how to do it. It's one thing to get these, when I do a trade, you get a push notification, tells you when you're doing the trade. But we also do these, we both do these educational meetings so you can learn why we're doing it. So you can come up with ideas for your own. I mean, there's we both talked about people saying, "Hey, what do you think of this? What do you think of that?" I mean, some of our best trades, like, holy cow, I didn't see that. In fact, that Coca-Cola trade where we made, was it 700% or was it 500%? I can't remember. But it was one where I had mentioned it a couple of weeks before, and I just kind of lost track of it because you're trying to follow a bunch of different things. And I said, keep an eye on this one. This is going to be a good negative play to make soon. And sure enough, he came in and said, Matt, did you see what's happening in Coke today? Boom, we jumped all over it. It wasn't me. It was because people are learning from what we do. Again, it's one thing to just get these trades sent over to you and you go through them like a robot, but you want to know why what's happening, and then you can find out the trades for yourself. And it's like anything else. The more you the difference between sometimes
Matt broke it again. He froze again for about 10 seconds.
Oh, sorry about that.
It's all good, my man.
I didn't really say anything differently, but the one thing I want to say is the volatility. Just remember the volatility thing. Sometimes we say volatility, and if you're not on Wall Street and you say volatility, you just say something's going up and down a lot. Okay. In Wall Street, a lot of times they say, oh, volatility is going up. That means the market must be going down. But sometimes volatility be either direction. What I'm going to say is the second half, the one that's known better outside of Wall Street. We're going to see a lot of volatility for the rest of this year and well into next year as well. And so in other words, we could see big moves in either direction. So the VIX actually may go down a lot, but that'll still be the big moves, and that's when options traders make the most money. But we have no matter what we're doing politically, we have geopolitics, we have earnings that we have an expensive stock market, we have all sorts of things that are going on that I think is going to keep these movements in the market very big. We're not going to be into one of those sideways moves where we sit there for. We had no summer doldrums this year. I can guarantee you that, and I don't think we're going to have anything like that for at least the next year. So if you're getting involved, this is the time to do it. I know that it sounds self-serving, and I suppose it is, but it's what I truly believe, and we've seen it. What's been happening really since the pandemic. I'm just telling you, when markets get expensive, a lot of interesting things happen. They either get way more expensive, they come down. And the biggest thing is if you're in a place where people are protecting each other, helping each other, that's when the market goes down, you can still make money. Okay. Where so many people are losing their shirts. And we had a really good year in 2022 when most people were down quite a bit. And the whole thing is that when you get those big downturns, and what happens is that people end up selling at the exact wrong time. Market's down 25%. I knew I should have sold it when it was down 10%. I knew I should have sold it when it was down 15%. I didn't sell it at down 20. Fine, I can't take it anymore. It's down 25%. I'm out. And that's the exact bottom. While they're losing money all the way down, we're, can't we say we're making money every trade? We're making money, and suddenly we've down 30%, and you hold on to it for 10 years, and you're patting yourself on the back. It's an incredible time to be trading. And I just, of course, I think our services are great, and I think what Chris and I do, very different but very helpful. And the fact to be able to get the both of us together, or both of us in the same package, is I think quite a value. So good luck to everybody. Chris, thanks a lot. Great to see you. Rodrigo, thanks for hosting, and we'll see everybody. Boy, the next 7 trading days are going to be very, very interesting, to say the least. And I think that will continue easily into the end of the year and beyond.
That's great.
Make sure you stand for Rodrigo, who's going to kind of explain some more details about the 2 programs here. So good luck trading, everybody. We hope to see you in the rooms very soon, live trading with us. Again, the next 2 weeks with the elections, FOMC, we got a lot of trade opportunities coming up on the board. So we hope to see you live soon.
All right, guys. So thanks for being here, Matt. Thanks for being here, Chris. I will see you guys in the chat room tomorrow, right? And everybody else here, I'm going to show you pretty much every entry, every exit, all the trades. If anybody has questions, just know the lifetime is not on the checkout. You need to reach out for that. So let me just kind of go through a couple of things here. Matt, thanks for being here. Appreciate you, man. And Chris Capri again was here with us. So yes, you can get them separately. I know that some people did get them separately, but if you get them together, it saves you a lot, like $1,000, something like that. So if you get them together, yes, it's better. And keep in mind, both of these trades are entries and exits, all of them. Like this trade, you would have received this alert on your phone via push notification. So yes, you do have a 7-day money back guarantee on this. This is another trade, let's say from Chris. You know, you would have received this, and then all of the other entries on the other trades, right? That he's in. So entries and exits for everything. Now, Chris Capri, the last about 18 cell alerts or so, like basically each one individually of these ones, right? If you count all of them, right, it goes back to like 17 or something. So 100% winning rate in September, 100% winning rate in October for Chris Capri on trading waves. And then Matt Maley's tearing it up as usual, of course. So these are all trades that you don't have to put the work into it. You don't have to figure out the best entry, the best exit. If you have a full-time job, this is basically like tacking on another full-time job with none of the work tied to it. You're writing along the trades from Matt and from Chris. Yes, if you get the bundle with that includes Matt and Chris, you do get Benzinga Pro, which is a great tool. I use it every day. Basically, stocks, scanners, news feeds. We're a financial news company. If you did not know, Benzinga, we are a financial news company. So let's say we have, I think, about 30 something million people a month on our website. So it's obviously a resource, you know, to a lot of people in the world, right? For investing, for trading. And obviously, our trading programs, there's really no equivalent. There isn't really a comparison that you can kind of put this against, right? Because we did start this from scratch. I launched all the programs here with Matt, Chris, Nick, all this stuff. I think that this is a great combo, though, if you get Chris and Matt, because it does not require you to be in a live call to be right now. If you want to be in a live call for educational or trade purposes, you can definitely add on Nick. Just let me know. But obviously, you know, they have different strategies. Like Matt Maley, he focuses on buying calls and puts. Chris Capri focuses on bull call spreads. Nick Shaheen focuses on credit put spreads. So they all have a different angle, right? But obviously, don't trade alone. That's the main point. You know, and for that matter, just imagine if there would be a company that was dedicated to help you make money every single day with options trading, with different strategies, with access to the map to the analysts all day Monday to Friday. It's not just about giving you the trade alert, it's about education, guidance, mentorship, actually teaching you something, right? So that also makes us unique in that way, right? That we go above and beyond basically to help you with all this stuff, with all the programs, give you real value. But the point is, we want to show you there is a good side of trading. There is a side of trading that makes money. There's no need to keep, uh, you know, looking from the sidelines, guys. You can come inside, take a seat, have a look, join the team. 7-day full money back guarantee. You know the trades are working. You're looking at all the trades. You've seen the analyst. Now the PMP, which is Chris Capri's model, his trading model, it's right here. This is a different link, and it's basically a 299 one-time payment for this. You get 16 courses. It's his entire model. This particular one does not have a money back guarantee. It's pretty much $300 for this for this program, the PMP course with Chris. If you get the bundle, it does not include this one, but you can definitely add it, you know, for a discount. Just give me a call. Now, the lifetime, I suggest that you take the lifetime because it comes with Benzinga Pro. We might discontinue the lifetimes starting next month. I have no control over that, but I'm telling you, I'm giving you the heads up. I'm telling you, this is not a drill. Okay, it's not a drill. So if you can get the lifetime, definitely do it. Um, or at least make sure to send over an email, so that way, you know, there is a contact right before next month. if you want to get the lifetime, right? I definitely suggest you get it. It's a one-time payment. I'm waiving the maintenance fee for life. The deal could not be better. It just couldn't. So, and I know that, let's say Benzinga has a lot to offer, but I'm here to show you the programs that have the highest returns, right? The highest value. And I have a unique insight because I started the inner circles here 4 years ago. So my goal has been to basically help everybody make as much money as possible with all of these different option strategies. So the only way to do that was to build it. The entire inner circle research, all this stuff, all this platform, connecting the stuff, your account, the whole 9 yards, was started from scratch, right? So developers build the whole team, everything, and you have a very fine finished product. I will tell you that, right? So obviously the analysts are great. They have a lot of experience. The results speak for themselves. You can see Matt Maley. These are the alerts that you would be receiving, entries and exits. And Matt is scaling out. Look, TLT 320%. Then he sold another one for 400%. Then another one for 500%, and another one for 570%. So risk management is already applied to all of these trades. And the trades with Matt, you can do them with 10, 20, 30, 40, $50. You don't need a massive account. The trades with Chris, you can do them with $40, $80. The most expensive ones would be, anywhere from $100 to $200, like the most expensive ones. So um, you don't need a massive account to make money with any of these programs. So if you have a full-time job, this is perfect for you. You don't have to put in the time, the work, the energy of building this whole skill set from scratch, right? You can make money as you learn. We do have education stuff, a lot of education. So all of our programs, including this one. So Nick Shaheen, Nick was not here obviously, but Nick's program, he's available 9 to 5, Monday to Friday in the Inner Circle chat room. So it's a live meeting, everything from education, from live trading, to open Q&A the entire day, strategy development, trade building, trade feedback, all that stuff. It happens live the whole day. Yes, you get swing trades with Nick. Those will be about 3 week holding periods. You'll get about 10 to 12 by email or push notification. But if you want day trades, or if you want a live instructor, live analyst the entire day, Monday to Friday, available, Nick is the only inner circle that has this one, right? So Nick focuses on credit put spreads, and he's very conservative with his strategies. He's a beast in technical analysis, and I know. Look, we have an option school, which is great. There's this option school here with Chris Capri. You have meetings with him Monday, Wednesday, Friday. Access to pretty much a whole suite of options education, not just the concepts. What is a call, put, spread, all that, but literal strategies, applicable strategies, and how dealer hedging, market gamma, and market makers operate and think. So there's plenty of value with what we have. So that's what I'm saying, guys. There is really no equivalent to what we have here, what we've built here, for the past 4 years. So there isn't much of an equivalent with this stuff. Um, and the PMP course, remember, that's where he teaches the model. So you can actually go to the option school, learn this from a former hedge fund broker, learned the entire day as well with Nick Shaheen, Monday to Friday. And we also have, let me put a link here. So if there are people here that only buy stocks, okay, if there are people here that only buy stocks long term, okay, if you're looking to buy and hold stocks, not options, we do have Tim Melvin, okay, and we just launched the Momentum Edge here, and this is $297 for 1 year. You can get 2 or 3 year. You can get 2 or 3 year. Terms, right, of the program. This is only for the founding members. We basically launched it. I think it was Sunday. Yes, Sunday we launched this, And the people that obviously join within the founding member period, they do get this pricing. This is, again, I want to repeat, only if you're buying and holding stocks. And again, I would say about minimum 1 year plus, 2 year plus. There, it's very fundamental driven, heavy research driven. It's something that you're not trading around. So again, a different bucket, a separate bucket. And this just goes really to just kind of show our commitment to really kind of close that education knowledge gap so that you can not only have your trading bucket, but you can also have a long-term bucket. You can also ask Matt about long-term buckets, right? Take advantage of all of the analysts that we have here, of all of the resources, the value that we have. Plenty of analysts. The focus is big time, obviously, options. The majority of you guys trade options, but have that separate bucket. Or even if you're not trading options, let's say you're trading stocks, have that separate bucket. This is like focused on that momentum edge. So I put the link there if anybody wants to get that separately. And the masterclass, this is something that I did with Chris Capri about a year and a half ago. It is included in the universe. So the Benzinga universe is a program that includes everything we have now and everything we'll have in the future. It might get discontinued next month because it's so ridiculous. I'm telling you, giving you a heads up. All this stuff I'm telling you is not a drill. Okay. So the Benzinga universe lifetime will give you access to everything we have now, everything we'll have in the future, including Pro, Moneyline, Matt, Chris, Trading Waves, Tim, everything. Momentum Edge, Benzinga Pro, everything we have now, Masterclass. And for that, you have to call me, right? There's no checkout for that. The only way is to do it manually, right? So just give me a call if you got questions on the Benzinga universe. So the other stuff here, the masterclass. This was a small group, about 10 to 12 people. It was like 10K per person, just to let you know. This was an intense coaching class for about a whole 4 months. 16-week masterclass. We met every Sunday with Chris. Chris was basically directly coaching people during their trades and going over their trades, giving immediate applicable feedback that you can use from a former hedge fund broker who used to train brokers at the fund in Wall Street. Again, none of these people are YouTubers or TikTokers, right? These are people that have real experience, direct knowledge, industry experts. And also, not only do they know how things work on the inside, but they also have trades that, again, you're looking at the trades for yourself. And there's a money back guarantee as well. Just know that. But this program, the masterclass, full coaching, it's the most intense coaching I have ever seen for anything. The amount of education that you're going to learn there, I mean, that's why we can't do that with 300 people. That's why we had to do it with a smaller group, and this was only made available for people that had the option school. Okay, we've had the option school for I think over 2 years now, but you will get the masterclass if you get the Benzinga universe. Okay, so full commitment to your success, right? Full commitment to your success. We have the analyst, we have the tools. Benzinga Pro, remember, this is a fully proprietary platform that we have. We've had it for about 15 years, and it is our flagship main thing. And the competition to this is, let's say, Bloomberg Terminal, but we're not a brokerage, but this would be what you would consider as far as like the platform, what you get out of it. And personally, I can tell you here, uh, there's people that have signed up for this for Benzinga Pro that are everything from a retail trader to a Wall Street analyst, trader, broker, a prop trading firm, research firms. So it's something that is used by the big players as well. And you as a retail trader, you can have access to that. And that basically, if you haven't, gotten it yet, that is why Benzinga is so different, right? We're really committed to this. So this platform will leverage the playing field for you. It will. It will. So you can also learn technicals with it as you go. You have charts here. So if you basically get the lifetime, you get Benzinga Pro for free, and you get all charts for free, scanners for free. And these are proprietary scanners, ARP scanners. We're putting new stuff out there with Chris. If you did not know, we do have that open interest tool So this is only for SPY. If you get this package lifetime, you will have lifetime to this open interest tool and the one that we will be pushing out, releasing, which you will be able to look up more than just SPY. Right now, we can see every single call and put in SPY. We can see the volumes, where they are, where people, you can see where money is parked, basically, which it's almost like giving you these goggles, right? That can kind of give you this insight. Obviously, coding, building, and also lining up the chart and everything. This is really where the developers, big shout out to Vin. Vin is the coder developer. I've been working with him here for like 3 years or something, 4 years, or for a long time. And he and also Tammy, right? We have coders, developers, guys that have been here full time, like really smart people that kind of make all this stuff work, right? It doesn't just pop up, suddenly, but, we have to pay for data and all that stuff. So ultimately, all for what? To help you, right? So yeah, this is for SPY. You can see where every call input is, and we're going to be able to see where the same thing for different stocks, and that is going to be part. Let's say if you get the PMP course, you will have access to that. If you get the trading waves, yes, you'll have access. If you get the bundle today with Matt and Chris, you will also get access to that. Even for the new one that we're gonna put out. Now, I will let you know, very in the near term future, uh, they will be it'll be a separate tool that you can purchase separately. I don't know for how much, but uh, I'm telling you right now, join because you'll get access to it. Now, if you get the lifetime, you will have lifetime access to this tool and every other tool that we release for Trading Wave members, for PMP members, and Option School members. So this is, if you get anything with Chris, right? Any of these tools that we keep building here, right? For Trading Waves with Chris, you will have lifetime access to them. If you're not a member of it, you will likely have to pay for those tools separately. But I mean, you have access to them now if you join. If you join, you will have access to this one and the other one, and you won't have to pay, if you have the program, obviously, right? So you also get Benzinga Pro with that. Everything has a 7-day money back guarantee except the masterclass, the PMP masterclass, the 16 courses there with Chris, okay? Tim Melvin is great if you're buying and holding stocks. I can tell you everything we have is great. We don't have anything that's bad. No matter where you go, no matter where you go, every direction is a good direction. With the PMP course, you will learn to read charts like a real professional, not like a YouTuber, artist. And how do you know if this works, right? How do you know if this course will teach you anything? Well, let's look at the results, right? Let's go to trading waves. Let's look at all the trades from Chris Capri, and let's just see if it's actually, worth it, the model, right? So let's look at the trades again. Oops, everything is time stamped here. So you can read that 126% here, 84 there, 96 there, 56 there, 33% there, 28% there. This is every entry and exit. Every entry and exit, 32% there. So you have a 100% winning rate in October. All right, we're moving to September. 101% there. 43 here. 23 here. Another 25 winner here. 16% here. 54% there. So in September, again, another 100% winning rate. So you can get all of the trades that Chris his that he is taking. These are his trades. These are Chris's personal trades. So are Matt's, right? So if you get these trades with Trading Waves, it already has the model applied. If you want to learn the model so that you can apply it to what you're currently doing okay, you can do it while you get the trades from Chris, or you can just get this PMP masterclass from Chris. This is where it's happening. This is where it happened. And you get a weekly meeting every Monday here for the PMP course. So no matter what you do, I suggest adding this on. If you just get Matt's room or if you just get Chris Capri's room, there's no wrong decision. right? Both of them are great. And if you can actually bundle them for this price, you know it's a good deal. Individually, look, each one of them is 1782 for the year. We're not just throwing numbers around. You know this. 1782 for the year, and it's very likely that that goes up, but I'm telling you, just for this meeting that we're talking about, right? So 1782 for the year just for trading waves. 2297 for 2 years, okay? 7-day money back guarantee on all of them, okay? Stock picks inner circle, chat room with Matt Maley. 1782 for the year, 2297 for 2 years, 7-day money back guarantee on everything. But if you get the deal, the power pack, which again, this is a very nice checkout, by the way. If you get this deal, you get both of them for 2497 for the year. Now, I really wish you would have joined 2 months ago. You would have had 2 months back to back with 100% winning rates with Chris. You would have gotten all the wins from Matt. It's not overnight. You're not going to become a millionaire overnight with these programs. We're not saying that. So the trades work. You have a money back guarantee. The deal is a wacky deal. It's a great deal. You're saving over $1,000, or a little bit more actually, with the with the yearly, right? And with the 2-year plan, you save like over 2,000. So now the lifetime used to be there. It's not there anymore, but you can still get the lifetime. They might discontinue the lifetime packages, but you can call me and I'll still hook you up with it. It comes with Benzinga Pro. So if you want to purchase it, you just go in here, you put in your card. If you already have a card, if you already have a membership here with Benzinga, your card will be saved there. You click this button, it'll go through. If you want to put a new card, you can click that and just type whatever numbers you need to put in there. If you have PayPal or want to use PayPal, click here and it's going to take you to PayPal to sign in and do all that stuff. So, recapping real quick, recapping the trading waves. All right, we're going to do this here just as a one-time exception, okay? For the people that are signing up or want to sign up. If you join today, because it's gonna change, and that's out of my hands, all right? But if you join, I can give you the option school included in this program for absolutely free. That's right. Just for if you heard it, you heard it. You will not hear this anywhere else. If you sign up for this program, not only are you getting Trading Waves and Matt Maley and Benzinga Pro, you are getting the Benzinga Option School. I will give you the Benzinga Option School. And guess what? You also get trades there, which are not in Trading Waves. I'll give you an example here. IBM, bear put spread, 145% return. This is Chris Capri. 43% return here on another one, trimming. So all entries and exits sent to your phone directly. So I'm giving, and most people hear this out. Most people don't know that we have exclusive trades in the option school for the option school members. So, like I was telling you earlier, my goal is to show you where things are happening, and I'm only talking about the game changing stuff. I'm only bringing you the best of the best, good quality, high quality, great analysts, people that know what they're doing. You have a money back guarantee. The trades really speak for themselves. After all this and going through the analyst and listening to them, the other question you really need to ask yourself is, can I make my money back with this, right? If I join these programs, keep in mind that is the goal. We're not here just to chit chat. We are here to make money in the stock market. We're here to help you as well in the way, right? So the analysts are here to help you, teach you, educate. And, Benzinga is here to provide the platform, the technology, the resources, all this stuff to make it happen. So everybody collaborated, everybody put, their piece of the pie, and you have something really nice. So Chris Capri also had a 100% winning rate in the option school trades, September, October, right? In September and October. So if you join today, Wow, a bunch of people joining in there. Look, if you join today, remember you're getting the option school now because I upgraded the deal here live for you. You're getting the option school. You're getting trading waves. You're getting the stock picks inner circle chat room with Matt. Stock and options inner circle chat room with Matt, and you're getting Benzinga Pro. You will never hear this deal again in this meeting. In this meeting here, the last time we did this was about 2 years ago, and we didn't do it again for obvious reasons because it is a deal that is too good. This is a perfect example of us going overboard and giving you a ridiculous deal. Okay, this is a perfect example of us being like, let's just give them the best deal possible. And then we realized, like, damn, we gave them the deal was actually too good, guys. So we could only do it, we only did it that one time 2 years ago. So today, I pulled this out from the vault. Okay. The checkout is polished here, very nice. And again, you have this special deal happening today here. Options Inner Circle with Matt, Trading Waves with Chris Capri, Benzinga Option School, PM. I'm sorry, not the PMP. The Benzinga Option School, Trading Waves, Options Inner Circle with Matt, Benzinga Pro. Four things. And also, you get the tools, the open interest tools that we went over today, right? This one. And you will also get the updated release, which will include individual ticker search, where you will be able to analyze every single call and put on certain stocks. This will give you a unique insight. And Chris teaches, well, he talks about it a little bit on the option school, but the system is PFP, price, flow, and positioning. We have the PMP, the price action and the positioning part. We have that here. What we don't have yet, because we need to build the tools from scratch, because that's basically what we kind of have to do here, right? We need to build the tools that we want because they don't exist, kind of like how we did with Benzinga Pro a long time ago, right? But that's kind of what you're here for, right? It's not just what we have today, but it's what we can do for you tomorrow, right? How can we help you in tomorrow's markets? And every program that we have here, we're trying to close that knowledge gap, that education gap. We listen to our users. I've talked to 40,000 people maybe in the past 4 years, and we listen and try to help people where the weaknesses are, where they need the help the most, right? So that's why we did the PMP. We know a lot of people struggle with technical analysis. So we brought in somebody like Chris Capri that has 2 months back to back with a 100% winning rate to teach you his model. Okay. We had to do I mean, we, for us to make this happen, just this PMP course, keep in mind, Chris Capri had to completely put out his trading model for us to give you this package. I'm sure you can imagine everything that would implicate, right? So we we have the model here for you. We have the trading model, and obviously in trading waves, you can look at the results. You have a money back guarantee for everything except the PMP masterclass, which is Chris Capri's trading model. Now the options flow part, the flow part of it, we are about to put out those tools. So once you have that, right, we're gonna have those things here. Chris can talk with you about options flow and all that stuff. But it's a great tool. You're also getting it as part of your deal. So I know a lot of people, Shantae, thank you. I know there's a lot of people here that have questions and have been calling here. So I just want to make sure obviously I'm on this call, so I can't go over this stuff right now, but I will call you back if you can, if it's possible. My suggestion: do the lifetime. You're going to save money in the long run and in the short run as well. You get a lot more as well. If you do the lifetime, I will give you the PMP and I will give you the master class, the options master class, right? So a big shout out everybody for being here. We had a great session. If you have questions about the program here with Matt, with Chris, with Nick, if you want to join one of them individually, and or whatever, you're confused, give me a call. We can go over the details. But definitely, big shout out to Chris and Matt for being here with us today. You can talk to them the entire day, Monday to Friday, 9 to 5. in the inner circle. That's where they are. That's basically they are our resident analysts, right? So they are here, but obviously Matt Maley, chief market strategist at Miller Tabak. So he's obviously up higher there, I would say, but still a Benzinga analyst here as well, right? So thanks for being here, everybody. And reach out if you have questions. If you can do the universe, I would suggest to do that. You will be set for life. It is like a lifetime tuition to everything stock market related now and in the future, all the programs, including the future master classes. If we ever do one of these 10K classes, you'll get that for free if you have the universe, right? If you have the universe, I'm telling you, you are set. You can even pass it on to your kids. They don't teach this stuff in school or college, but it is a skill set that you can directly apply today, today, to start making money in the stock market, right? Or at least get in that direction, right? So we'll see you guys in the inner circle. Thanks for being here. Reach out if you have questions, everybody. Have a good week, and we'll talk to you guys soon.